go, but you never ask yourself how low it can go. And I need you guys to start thinking that way when you have these 30 percenters or these 20 percenters or even 40, 50, anything higher than that. Sure, how much higher can it go? But ask yourself, how much lower can it go? And I promise you, you'll become a more successful trader when you ask yourself these questions. But that's it, guys, really, for today's lecture. I kind of just want to see these plays kind of play out. You know, we're in XL, we're in LMPX, we're in SDSC. A couple of guys are in VZ right now. And we just gotta, we just gotta wait it out. I don't know if I'll be announcing any plays coming up just because I kind of want to see how the market, based on what people are saying, futures are really green right now. But again, things can always change. Nothing's perfect.
Hey, Mario.
Yeah, what's up, Hostel?
I got the stream up for anybody that's not able to see.
Yes, I've been getting a lot of those questions.
Hey, Mario, quick question. I made the SDC play, didn't get into it, but I've been, as you mentioned, making more money in shared playing with your plays than options, just because of the risk tolerance, taking profits soon, not being greedy and stuff like that. What entry do you think is a good one to get into SDC? Is now still a good time to pick like up 100 shares, like $1,000 worth, because they're fairly low risk as compared to options. You think it's still good for SDC, or?
I mean, that's, it's funny you say that. And I think that's actually something I left out from the lecture itself, is that I'm not too worried about getting corrected or having a correction with shares. And that's no disrespect. Again, I always say this, right? Like, it's never any disrespect to options or the concept of trading options. Because let's say we get corrected and it goes down to $9.40, or heck, let's say it goes down to $7. We have two options. We either average down right here, or we hold till it gets back up and we make profit. But we never sell for a loss. And that's the one benefit that we have with shares, and it's why we trade it, and it's why I trade it. Because at the end of the day, I can hold these shares for as long as I want. I can wait years if I have to. But I will make a profit and I will not take a loss. Some people prefer to take the loss and move on and just go on to a different, a different stock, and that's okay. At the end of the day, you're your own trader, you make your own decisions. But personally for me, I hate taking losses. And I definitely would not do that, right? As for getting in, we would have to pay attention tomorrow for pre-market Semwise or Semwise. I said anything under 11 is still viable. It's already at 11:06 when I alerted that, because I know a lot of people still wanted to get in. Depending on how it opens tomorrow morning, you can make that decision on your own. Personally, I think this is going to be green. I am going to laugh if this is red tomorrow and I'm completely wrong, and I want you guys to let me know it. I just, based off of the charts, and because VCAV is in here, I'm not going to say that it's a feeling. Based off everything I'm charting, this should go up. Okay? As VCAV says, feelings don't mean shit. But yeah.
All right, thanks, man. I'll keep an eye out on pre-market and see what's the good time to jump in. And the price target
of course,
$13, right?
Yeah, like $12.50, depending on what it does. Like, depending on what it does right here. When people always ask me, it's like, when should we take profits? I always talk about putting your resistance lines and using that as a good indicator of when you should take profit. And that applies to options. That applies to anything else. You should take profit around this area, just because, again, then we move on to the next one. But yeah, if you guys have any more questions, I'll be more than happy to answer. Like I said, this is more of a easygoing lecture. It's not going to be too technical as much as the last 2 weeks. I just don't want to beat a dead horse and teach you guys support and resistance every single day. Next week, I promise you guys, we're going to get a little bit more of a technical one. But each time I want to teach you guys something new. Last week we taught volume. Next week we'll teach, like I said, candlestick patterns, how to read candlesticks on a better level. I just need to really organize a lecture, and it takes a little bit more time.
Can you show us how to put those blue lines on our own charts?
Pardon me?
Can
Who
you
is
show
that?
us how to set up? It's Ashley. Can you show us
Hey,
how to
Ashley.
set up this? Hey, Mario.
You want me to teach you how to do support and resistance? Hello?
I think she's just asking to show how you draw the lines out.
Oh, yeah, sure. I mean, this platform I use is TradingView. It's free, and I know a lot of you guys have been asking if TradingView is free. It is free. I think there are non-free stuff, but it's after you use 3 indicators. Personally, I don't use more than 3 indicators. I don't really have a need for them. The only one I'll use, if anything, is just the stochastics, because lately things have been channeling a lot, and that's when stochastics is best used. But besides that, I don't really use indicators. As for drawing the actual lines, you can pick the color yourself, but you go to this section right here where it says horizontal line, you click it, and if you want other things, you can do trend lines, info lines, trade angle lines, all of these different type of things. I use the horizontal line, so you click wherever you want, and boom, it draws the line. Is that what you wanted to see, or is there you wanted me to go a little bit more in depth?
Okay, great. Now I have horizontal line. I have TradingView, and I have my watch list set up. Those blue
Okay,
lines,
perfect.
those previous blue lines, or those some type of formula?
These are all support and resistance lines that I've charted out. If you actually go to my previous lecture of last week, that should be under Professor Hostel's tab, I go into really in depth of how to draw support and resistance lines.
Yes, I was there. I just didn't know which tool you used. Now I know. You just changed the color on the horizontal line?
Yeah, I changed the color. I don't remember exactly how I did that. I think there's different ways to change the colors. You might have to play with that. I recently learned how to turn it black by going here. So, you just got to play around with it a little bit. You should be able to find it.
Thank you, guys.
Of course.
Hey Mario, this is Akshay. Okay, I was looking at TAK with RSI curling up and it bounced off the support. Do you think like it?
Yeah, tag, man. I'm a little indifferent about that one. I know Austin's been telling me about that one a lot. I know Tilio's super bullish on it. Kathy, obviously, I think I forgot who posted it today. I want to
they bought like 2 million shares in 2 days, but there is a like 29th is one where they are presenting something on the lung cancer or some kind of presentation which I haven't gone through. So
this guy, right?
Yes.
Yeah, I mean they recently took a pretty hard dip. I was actually talking to Austin about picking up shares around here, like around the 17 area. Obviously, already ripped. I don't know if I would personally get into it just because it rips that hard. I don't like chasing stocks that have already ripped. But I just keep hearing good things about it, so I wouldn't be surprised if it keeps on ripping. What exactly do you have a question on regarding it?
I mean, I just wanted to see like whether I'm chasing it. Am I chasing? It's already ripped. I'm seeing it, on the support. It bounced back. So
yeah, I mean, right? It bounced off support pretty hard.
Yeah, I just personally don't want to get into like chasing situation.
Just
so I think
just pay attention to see how it opens tomorrow. Just because it ripped one day doesn't mean it can go back down the next day and retest support. There's a lot of times where a stock will rip, but market's like, nope, you're not ready to go up that yet. So let's test support one more time. Ensure that that's actually what the market wants. If buyers step in, then they'll step in. If not, sellers will step in and drive it back down. And that's all you can really do, and not really stress about it too much. There's a lot of times where I see stocks that I really want kind of just rip and you just have no opportunity, and you honestly feel like shit because you really wanted to get in. You just need to understand that plays always come and go. Like they're just always coming. I can count so many times where people are like, I'll never be able to trade Tesla again. I'll never be able to do this. And every single time Tilio surprises me and he comes up with new great plays for Tesla. Obviously, I'm not a big proponent of Tesla and trading it because a lot of us can't afford it, and it's just such a volatile stock. I think that there's so many other beautiful stocks out there that will make you more money than Tesla will. But again, like plays come and go. There's so many stocks out there, guys. I highly encourage you to always look for different stocks. Don't get stuck on the same ones that everyone else is watching. Spread out. If you notice, like none of the stocks that I announce are any of the stocks that any of the other analysts touch. Besides, I think LMPX, I think Telio called that one out. And then there's a couple that Hassa has called out because him and I trade very similarly. But I encourage you guys to find stocks that no one else is talking about. That's where the money's to be made, I personally believe. When you can find stocks that are cheap, affordable, and that are very volatile. Like these two guys. Right? They're super cheap, super volatile, and they make me a lot of money. Why would I want to go chase a stock that costs $700 or $800? I don't even know where the hell Tesla's at right now. There's just no reason to. Anyways, before I go on ranting.
Thank you so much. Thank you so much.
Yeah, of course.
What do you think about CrowdStrike? That I was looking at that. It still seems like it's forming a cup and handle on the daily chart.
What stock is that, Semis?
CRWD, CrowdStrike.
Oh, I don't know that stock personally.
Okay.
Sorry. Yeah, maybe Hostel will be more than happy to charting it for you. Maybe it's something that I should put on my list. But I'm already swamped with so many, tickers myself that I don't know if I want to add any more. With the current plays right now, I will show you guys plays that I kind of want to see work out, and we kind of have to see if they can even pan out. VRM is still on my radar, guys. Again, I really want to see what it does around this 35 area. It kind of it's been bouncing off like 36. And again, I almost want to announce this play and just start a light position in the 36 area, but I'm also kind of afraid of it coming down to the 33 area. Nothing wrong with just averaging down at the 33 area, but I want to see what this does tomorrow. I think this has a lot of potential, and it respects its support and resistance so well. So maybe you guys can make your own plays out of this one, right? Keep an eye on it. Look at it. It's still a fairly cheap stock. It's only at 36. If you can get it at 33, great. If we can get it at 35, even better. So that's one of the plays that I will be looking into, coming into this next week. The next play that I want to look at, where is it? Actually, it's up here. Sorry, guys. Pets, which it almost falls into that category of should we have waited for the 29, right? This is actually a stock that Hostel trades religiously, and he's made a lot of money off of it. I've made a lot of money off of it. I think Hostel, I don't know if that's correct. Was this the last time we caught it? It was like around this 29 area, and I think him and I both took profit. I think actually I took profit before he did. I think he took profit like up here in the 34s. I think I chickened out and took profit like right here. It's literally going to do the same thing. I kid you guys not. Unless it comes back down to 29. But it's going to do the same thing. So it's going to go from 29. What was that? It's going to go from 29 all the way to probably 33, 34, unless it comes back down. So this is another one to keep your guys' eyes on. It genuinely follows support and resistance fairly well. And let me try to give you guys two more that I've actually been looking at. These guys are a little bit more pricier. They fall under the EV sector. it's SBE, and it's been channeling, or it's been in this uptrend for a while, and it's been respecting support and resistance. I guess it didn't respect the trend correctly. And that's the thing. I have a feeling it might come down back to 35, this area right here, and retest this area. Because there's not enough volume to dictate that buyers are stepping in right here. It's just not enough. We really have to see what it does tomorrow. So it can either rip from here and go back up and retest like 50, or it comes back down to 34 and we can pick up some shares right here, guys. The last one is Blink. Literally the same thing. It's weird because all of these stocks are kind of following the same patterns. And that's what I want to go into next week, is that once you are able to identify these patterns across different stocks, it just becomes so easy to find these plays. Where are you, Blink? There you are. So Blink is going to come down and hopefully test this 42. I'm just a little worried of it testing and coming back down to the 36. But if it does what I think it does, guys, and it drops to 42, it's a $10 difference from where we take profit at 53, 52. This one right here, this is where we make our money on plays like these, on these $10 changes. This is where the big bucks come from, guys. So pay attention to this guy. We'll be looking at it tomorrow. We'll see what it does. Honestly, I really hope. Honestly, I might just do it. I might just take take it. And if it goes anywhere near 43-ish, 42, I'm buying it. Like I'll probably load up on a couple shares. But again, that also depends on like how these other plays do. I just think risk versus reward, this probably has the best payout. Like, this is the one I'm going to be looking for, even over SBE, even though I actually use SBE chargers at my work. But again, it's the same thing. If this one even gets remotely close to 34, 35, and we can take profit at up here at 45, another $10 change. Alrighty, guys. Well, I'll leave you guys with that. Maybe I'll give you guys homework again. Let me think of a stock that I haven't shown on here that I want you guys to chart. Maybe I can give you guys a good one that a lot of you guys have been looking at, which is Open. I'm not going to show it on here because I don't want you guys to like get bias off of. So go ahead and chart Open for this week, guys. It's OPEN. Send it to me via DM. Send me a screenshot, and I'll let you guys know what I think of your chart. Again, I normally trade off the daily. You guys can trade off whatever. The support and resistance are still going to be the same. I know Zabes is a big proponent on that guy. I know FaZe likes it as well. And then maybe you guys can even go back and see what they saw in that stock and why they picked it at certain levels. So I'll leave you guys with that homework. I'll be able to answer any questions you guys have right now. Again, like I don't really do charting for you guys. So if it's any charting questions, definitely leave that for Hostel. But if there's anything when it comes to like emotions, if you're having trouble taking profit, if you're having trouble executing a play, let me know right now and I'll be more than happy to go over anything with you guys.
Yeah, I got a quick question for you.
Go for it. Danny?
So these plays that you usually take, like, I guess what's the average that you're usually in them, for
Like,
the money-making ones?
Are you talking about time or how much money?
Time.
It depends. Time is a tricky one. I was talking to VCAP about this, and I wanted to have, a lot of you guys have been asking for like a share challenge, and it's very difficult, right? I have a bigger portfolio. There's people with bigger portfolios than mine, and obviously we have a lot of guys with little portfolios, and that's okay. We all started there. I would definitely want to try to make it percent based. Most of my plays usually take about 2 weeks to a month sometimes. And lately, that hasn't been happening. Lately, it's been happening in less than a week, Danny. I kid you not. When we took XL, what was it, like 3 days? When we got out? XL was 3 days. Beyond was like a week. Um, what other play did I give you guys that we just like cashed out? LMPX was like a week and a half. And again, like XL and LMPX, we got into them again. And it's been like, what, 2-3 days? Obviously the week, like, I don't know if you want to count the weekends, but it's been 2 days. And I really think this is going to rip soon. XL is going to rip soon. SDC, we've been in for a week. Some guys are slow movers. RKT, we've been in for... Look, it's been consolidating just for so long down here. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. This one's almost like 2 weeks long. Some of these guys are just slower than others, and we have to be okay with that. So it's not that one per se that like SBE or Blink are going to take longer or shorter. That just really all depends on the stock and what it decides to do. Like I can't say it's going to take X amount of time. It's just too hard to actually calculate that. It's almost damn near impossible, to be honest. Beyond, the reason why I was able to do it with Beyond, and I probably shouldn't have done it, to be honest. Let's see, where's Beyond? You guys go into Beyond, and you can literally count how many days it consolidates in its support before it ripped. So here it was like 1, 2, 3, 4, 5, 6, 7, and then it ripped. Did it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and then it ripped. So when it came to here, I found it right here. I found it in 1, 2, 3, 4, 5. I found it in day 5, and I was like, okay, the longest it took was about 12 to 14 days before it ripped. We're already halfway there. I'm okay with taking that chance and buying at like the 120 area, which is when we got in, because I was like, give it a week and it'll rip. And it did exactly that. 1, 2, 3, 4, 5, and boom, it ripped. It's literally repeating itself every single time in this area, right? Will this always happen? No. If we start a war, president dies, there's a new virus, things always change, right? Like we can't expect everything to go down to a T, because if that would happen, XL would have never broke support. But in this case, it did, and it respected that to a T, and it took about 10 days, and then it ripped. So it's really hard, to be honest, Annie. I don't think any of the guys here can accurately say, hey, X stock is going to go up in 10 days. We get lucky sometimes. I'm just going to keep it, 100 with you. I don't think any of us can do it.
Yeah, it was more of like an average thing. So I mean, it sounds like a couple weeks to a month or something like that as usual. But obviously, yeah, it depends on everything. And then one more question: Do you reserve like a portion of your portfolio for like long-term stocks, like long-term stocks? They plan on like buying and just holding for like 10 years?
Yeah. There's 2 questions there, and then there's 2 answers, at least, that I want to give to you guys. When I first started, I didn't have enough money to have long-term holds. I just couldn't afford to have $2,000 of my portfolio in a long-term hold, because I just thought that flipping shares would bring me more profit, which it did. Now, some of you guys don't like flipping shares, and that's okay.
I do.
But in this case, I recently started having a long-term portfolio hold for travel, and even then, I'm already getting antsy about it, and I want to cut 2 of them because I just hate seeing them just stuck there. So maybe I can put it in a better stock. If you have the money, do it. I highly encourage it. I know FaZe is a big advocate of holding long-term. Tilio likes holding stuff long-term. Hostel has some long-term stuff. I just don't have the bandwidth to do that yet. Maybe when I get to 100,000, I'll definitely have some long-term stuff, Danny. So if you have the bandwidth and you have the portfolio size to do so, yeah, go ahead and maybe have 10% across a couple of long-term holds, maybe more. It all really depends on how much money you have to play with. As to when it comes to normal plays, when it comes to entries and averaging down, which I don't think I've ever talked about, I encourage you guys, if we start in early, I know Austin's rule is 50-50, so he'll go in 50%, and then we have to average down, he'll put his other 50%. I'm a little bit more riskier when it comes to stuff like that. I'll do 75%, and then I'll add my other 25% on my average down. So as you guys can tell, like everyone has their own little way of doing it. You just got to find what works for you. I hope that helps.
Yeah,
by the way.
man, it does. Thank you, man.
Of course.
Hey Mario.
Who is this? Yubberts. Oh, what's up?
Yeah, so I wrote down about 4 of the stocks that you want us to watch on pre-market tomorrow, and I think I kind of missed one. If you could,
Oh, sure.
bring it back.
I'll be more than happy to mention them again. Let me double check. Well, we're in this one already, so we have to see what it does tomorrow as DC. The other one would be, it was Blink. This is probably the one I really want you guys to watch and see what it does. And then SBE to see what it does. Oh, and then VRM. Sorry, I almost forgot about that one. VRM. Like, we really need to pay attention to what happens on these support levels. They're just so key. I'm excited. Like, I get excited when I see stuff like this because this has such a good potential. What's the change? Let's say it's 37 or even at 30. Let's say 36 to a 44. It's a good amount of change that you can make. These get me excited. These plays like this. And it takes a while, right? Like the last time it took 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 12 days until we fully took profit. I didn't announce this one, actually. Shout out to May for giving me this one. She found it, but I actually bought it up here at 35. So that's why I don't mind buying it at 35, because I feel that it could definitely hold the 33. It really tested resistance. It wanted to rip. It just couldn't. Didn't have enough volume. Again, going back to my last lecture, guys, volume is so key when it comes to things like these. If it doesn't have the volume, it's not going to break through its resistance. And right here, right, when it did decide to break the resistance, it had high volume. And then as soon as it was trying to test resistance up here, it just didn't get the volume that it needed. And as we started going down, volume started increasing. So pay attention to that, guys. I think there will be big plays coming up next week. And these will probably be the last plays for like January going into February, because I just want to be really cash heavy going into February.
I think you also mentioned pets.
Oh, shoot. Yeah, pets. Where is pets?
And Verizon too, I guess.
Well, Verizon we're already in. It's gonna rip. Like Fidget and I got into it a while ago. I think there's only like 2 or 3 guys in it with me. It was a really cheap contract that we found. I just didn't justify. Okay, here's a good example. This is where I believe options can be better than shares. This stock costs around $57, $56. My take profit, if anything, if we got lucky, would be 61. So that's barely a $4 change. If I wanted to buy 20 shares of this, because that would put me like around $1,000, I'm gonna make $60, $80 for $1,000. It just didn't make sense to me. I didn't justify buying 20 shares, spending $1,000, only to potentially make $60 to $80. Now, the option contract that we ended up buying cost around $38, with the potential to make a lot more money, and it had a very low theta. That's when I'm really okay with playing options. It was perfect.
Is it somewhere posted or Am I missed? Did I miss?
I didn't put that in the staff shares. I just felt like it didn't fit in there. I just posted it in the advanced trade floor that day. But let's find pets.
So, would you mind to just get the date or the strike price? What you? Because I've
Sure. It's on my Weeble account. It's like my baby options account that I kind of just mess around with. It was a February 19th, 2021. It was a 100 strike. No, the 60 strike. Yeah, it was a 60 strike for February 19th. And it cost us like $38. Yeah. And actually, we're still down, so I don't know. Maybe it still has potential, but we have to see what it does tomorrow. Again, nothing matters over the weekends, guys. You know, a lot of things change over the weekends, so don't get stuck on like one thing because tomorrow all of that can change. For pets, I don't know. This might Hostel. I don't know if you're there. Do you think we miss pets? I know you're big on grabbing it at 29. This is your ticker, by the way. Let's see if he's there. Maybe he'll go into it later because I know he's really big into pets. He's been trading this for years. But it happens every time where they just crash during their ERs. Look at that. It's kind of funny. It does it every single time. Once, twice, 3 times. Look at this guy.
Cough, cough, Intel.
Yeah, Intel does it too. But, you know, with pets, I can afford it because it's still in the $30 range. I don't like trading those really expensive stocks, guys, unless I really see potential in making money off of it. Just doesn't make sense to me. But in this case, let's see what Hostel messaged me. He said he needs another 15 minutes, guys. So, you know, he'll be back. But yeah, with pets, we might have missed it. We might have not. It's gone up before. And then for it to just come back down. So if we can grab it at 29, like, we'll do it. It's just it's a super easy stock to trade. And then we'll take profit up here. And we'll make money. And we'll keep doing that. Alrighty, guys. Any other questions? So we can give Professor Hostel a couple more minutes while he gets ready.
Can you open up multiple brokerage accounts under Webull?
Multiple broker accounts in what aspect?
Just to have 2 accounts?
I believe you can have
separate your money that way?
No, I don't think it allows that, but you can do a IRA account,
Yeah.
a Roth IRA, a regular IRA, and an individual brokerage. But I don't believe it allows you to have 2 brokerage accounts. I think I inquired that, and I understand why you're asking. I wanted to keep a long-term portfolio and a short-term and options portfolio, but I don't think
Yeah.
Webull allows that. So just keep your separate platforms. So I use 2 separate platforms for 2 different purposes.
Gotcha. Thanks.
Yeah. And this is why I love the Discord. You know, we can help each other out. There's you know, answers I still don't have, and this is why I never want to leave the community that you guys have, you know, helped create, and we all played a part in it. It's amazing. But I know TDA does allow for multiple brokerages. I believe I've seen Phase. Like
E-Trade allows. E-Trade
What's up?
allows. E-Trade allows for multiple.
Perfect. There you go. So, like, you know, there are different types of brokers that do allow it. For me, with TDA, I do have like a regular account and then my Roth IRA. But I know FaZe has like different accounts for different things that he does. Like he has a CSP. He has one like for his long term. He has his Roth. He has like his baby shares that, you know, he's been playing with me. There's just different things that you can do on there. VCAV, I don't know if you're there. I don't know if you can enlighten us a little bit more on TDA and the aspects behind that. If not, it's totally okay.
I did have a question though.
Go for it. I don't know who this is. Let me see.
This is Kevin.
What's up, Kevin?
Do you have a list of like stocks that you're currently in? Like, could you post that? Like, hey, I'm currently in this at this strike, kind of going.
Well, because I don't trade options, I wouldn't be able to tell you what strike price is.
I meant like what's your average cost, not strike price. I apologize.
No worries. I mean, I could.
You have things Discord? Live class right now.
Oh, Maro, I think that's a good idea. Maybe you can just have an Excel and then just post it for everyone to see when you are and what.
I mean, my plays are in that that staff share. All my plays are in there. I don't have my own tab. I don't know if I ever will get a tab. That's something that again, I always joke around. The bosses will decide if I get my own tab, guys. I don't try to get caught up in all of that stuff. Like, I need a tab. I don't need a tab. I need a chance. Like, I just want to give you guys as much information as I can and give back to the community as much as I can. But all my plays are in there. I don't want to show you what my maybe I can do this. I know I sent it somewhere. Like what? So I kind of don't want to.
You don't have to. I mean, it could be something that you just post on Monday morning. Hey, these are the
positions I'm in.
Yeah.
Okay. Out of curiosity, what would you guys benefit out of that?
So I can look back and see when you got in and kind of why. I'm new.
Okay. No. Yeah.
The Discord for like a week. So like,
okay,
if you got into a play 2 weeks ago, I don't know why or where you got in. So if I could, every week be like, hey, these are the plays we're still in, and this is where we got in. This is where we're anticipating taking a profit.
You're not the only one who's asked for that. I know when and that's why I want you guys to come to these lectures, because I mentioned CRSR, I mentioned Apple, and I mentioned Go last week. I showed you guys. Obviously, Kevin, you weren't here, but you guys saw the charts. You guys saw exactly what I was seeing, and this is why I encourage you guys to learn to chart, master it, get really good at it, and then take action on your own, because there are guys who saw those plays, took them, and are going to make money off of them. Which is, again, like, in my opinion, a little bit better than a watch list, but I'll probably still be able to do both. That way, if you don't come to the lecture, if you don't watch it, you still have a potential to play them. So yeah, maybe I'll do that for you guys.
Hey, this is Brian. I had a quick question. Where do you go to like chart? Like, where do you? Is that a
we
program
talked last week, right, Brian?
Or, yeah, we did, but I heard you talking about charting, but like, where do we go?
TradingView, TD,
yeah.
Webull.
So all of these brokers, except for TradingView. TradingView is not a broker; it's a platform. It's free. So TradingView.com. It's right here. It's completely free.
TradingView.
Yeah, and it's you can use it. I think you just have to create an account with them. That's it.
Okay.
Yeah, just play with it. You'll get used to it over time. It's really good.
Mm-hmm. It's really simple. What I liked about it the best, one, it was free, because I when I first started, I didn't know anything, guys. Like I was lost as hell, man. Like I didn't understand the concept of like having to have a broker in order to place like the trade. Like I didn't even get that. So like if you feel new, trust me, like I know exactly where you're at. And so I literally Googled free charting platforms, because I thought you had to pay to get into like Webull or RH. I didn't comprehend any of that. So any questions? That's why when you guys like, this is a stupid question, like, no, there's no such thing as a stupid question. Every single question you've had, anyone else has had. So
how long have you been trading?
Actively, probably about 6 months, like religiously 6-7 months. I really started mastering what shares are in the past 3, and that's where I started making most of my money. I think like it was 2 months ago or 3 months ago when I finally cleared like $1,000 with shares, to like exclusively shares, exclusively my plays. Then I remember it because I messaged Stock Daddy because I got excited. I remember the first time like I passed $300. I messaged him, and then I made 1,500, and I messaged him again. So yeah.
Maybe ask where you're at right now.
To make sure I heard you correctly, you said I could use TradingView, or I could also use Webull itself.
Yeah, so if you're on Webull, I believe it gives you the option to chart on there, right?
Yeah, you can chart
I don't chart using Webull. I've only used its mobile platform. So I can't really speak on that. Any of you guys that use Webull religiously, can you guys help them out?
It does its job. Like TD, TradingView, Webull, they're all three good.
Yeah, it's pretty much all the similar. Webull is as good as TD. I mean, you'll see some indicators and some additional fancy stuff, but for basic charting and get an understanding, it's all the same.
Yeah, it does
TradingView,
fibs. It
Webull,
does everything you
TD.
need for beginners.
Yeah.
Okay, thank you.
For beginners, it's pretty much all the same. I mean, unless you want to go into TD is the best for like going in too deep and a lot of things. But if you have either, it's. I literally started charting with these guys in December, and lately I've been picking up my own plays, and they've been paying up. Not
we
as
go.
big as Carl and guys with 100% plus, but I take 20% and get out of it.
Hey, there's nothing wrong with that, man. Taking
Yeah,
20%.
is good.
They stack up, and you'll be surprised how much money you make. I think someone asked me where I was at. I actually don't know. I have a lot of money scattered around different brokers. Like I said, when I first started, I was just so lost that I have RH. I still have Robinhood, and I invested all of that money into like one stock, and it's been doing really well. So I'm really happy about that. I have my Webull account. That one, and I want to be as what is it called, transparent with you guys. Like, I lost a lot of money, and I'm trying not to curse as much. I lost a lot of money. I remember when I was trading options, like I think I put 1,000 into my Webull account, and it went down to like 300, just off of me not knowing and me not understanding things. So I'm with you guys. Like I understand it, and I think it was after that when I got down to 300, it's like I'm doing something wrong. Like, this doesn't make sense. Like, I'm charting out stuff. What's wrong? And then that's when I just I'm charting out everything correctly. I just didn't understand the contract portion of options. And I think that's what kills people. People don't research what a contract really is and what it's made up of. You need to understand why it goes up and down. It's not just the delta. There's a lot more to do with a contract. Yeah. Implied volatility is a big one. Like, if IV does not go up, you will not make as much money. And I didn't get that, right? But I did get that, like, if I entered in this case, right? Like, if I entered at 29 and it went up to 31, I'll make money with shares. And if I was doing that religiously, why not try it? And that's when I completely switched over to shares and when I started making money. So find what works for you guys. I got a little off track there. Someone asked me earlier, but right now I'm in the process of consolidating all of my accounts into TDA. I really like them. I highly encourage a lot of you guys, if you're not in TDA, to get into it. I think their customer service alone is worth it. Their charting platform of TOS is amazing as well. I've just gotten used to TradingView so much that I use it, but I still go onto TOS to chart different things at times as well.
Do they cover transfer fees?
Yes. I transferred my Roth, and then I transferred like my baby share account, and they are covering up to $75 or like $100. But they said that most broker transfer fees don't go over 75, and like the most they use, it's either 100 or 125. I don't want to misquote what TDA can cover, but it's super simple.
Do they do it on all of them, or just like the first one?
No, that's the exact question I asked customer service. I was like, hey, so if I transfer over my Roth, will you cover that? And they were like, yes. And I was like, okay, so if I transfer over my regular brokerage account, will you cover that as well? And they said yes.
Nice.
Yeah, so that alone, I was like, all right, I'm going with you guys. I really like it. Clearly, you guys know what you're doing. So again, take the time to make these transfers whenever you guys can. It does take a while. I think both of my transfers took about 7 days. I'm expecting my other 3,000 to show up in my account soon. So, but I'm gonna put all of that into my Roth.
Yeah, I'm in the same position. I got Stash and Robinhood. So,
yeah.
Mario, I have a question about the Roth. How much money can you put into that per year? Isn't it like a limit?
Yeah. Is this Dolo or is this Eddie?
It's Eddie.
Eddie. Okay. So I will try to explain the Roth to the best of my ability, because I remember when I asked Hostel about it, I had so many questions. A Roth IRA, you're only allowed to contribute $6,000 per year.
Right.
Yeah.
And,
Is that the question?
You can invest in anything, right? Like, you could buy shares and stocks
Yeah, as long as you get approved for in theory, like if you guys got approved for options for your Roth IRA, like you could trade with that. And I kind of was asking Hostel about this, like, why don't we just have everyone open Roth IRAs and trade options on there? Well, yes, it is a retirement account, and it is meant to be a little bit safer trading, and options are highly volatile and risky. I was like, well, if the guys do make it, and if they do understand and they're making money, why are they trading on a taxable account where they can trade on a non-taxable account and just take advantage of that? And we kind of just sat there and we're like, huh. So I was like, yeah, you guys should, if possible, open up a Roth IRA. Like if you don't want to do shares, if you don't want to do anything else, and you still just want to stick to options, which I know you guys are out there, then that's okay. At least open a Roth and take advantage of the tax, the tax-free gains.
The only thing is you can't take that money out until a specific certain amount of time.
Yeah, people just want quick money.
Okay, because I have an individual brokerage account where I've traded all my stocks. I put in around 3,500, and I'm up around 16,000 just from that 3,500. So that's
shares or options.
What with shares?
Yeah. So dude, you're gonna get taxed on that. And that sucks.
Okay. All right.
If you would have had it in a Roth, you would have had, you said, what is that, like $13,000 profit?
Yeah, $13,000
completely untaxed. And here's the crazier thing, Eddie. Here's the crazy thing, right? I didn't know either, and this is why I get so excited about it. Right, like this is why I get so excited about this shit. Like, yeah, sure, you contribute your 6K, so you're allowed to take out your contributions. So if eventually, I don't believe in taking it out because I just want my shit to compound over the years. But if whatever reason you needed that 6K and you contributed 6K, you can take out 6K from your profits and leave the rest in there.
Oh, so and then that's not taxed though, right? If you take out 6K, like your initial investment.
I think it has to be after 5 years.
Yeah. There is a time limit. I think you're not allowed to touch it for. Oh, the boss is here.
6,000 can be pulled out anytime. Any
contribution.
Just profits.
Isn't it taxed after or before?
Nothing is taxed
until you take it out.
Profits aren't taxed if you take it out 59 and a half years old or later.
No, but they're talking about contributions, and even then it's not taxed because you already got taxed before you put the money in there.
Right. It's pre-tax dollars, right? So prior to putting it into the Roth, it's already taxed. They can't double tax you on the same thing.
Oh, so you can get capital gain in there without getting taxed the second time.
Exactly.
Tax going in.
Oh, okay. Well, again, you got to understand the contribution is not a capital gain.
No, I mean after that, when you're making money inside of the IRA.
Yeah. I mean, capital gains aren't going to be taxed as long as you hold it till 59 and a half and later.
Okay, yeah.
And the 5-year rule.
I'm trying to get rich before then.
The 5-year rule is specifically for people that are, say, 57 years old and open up a Roth. They have to hold it for 5 years before they can pull out profits.
Right.
So it's like if somebody were to put the money in, start making really good money by 58, 59, or 60, they're still limited to that 5-year mark. Now, let me explain something else to you. In 5 years, I plan to have $1 million in my Roth. Right? If I'm making $100,000 a month, I get taxed 10% off the top. If I pull profits out, I get taxed, say, 35% or 40% on top of that. I'm still looking at $50,000 a month in profits after taxes and penalties. So if you have substantial amounts of money and you're making good money every month or every other month, you can still pull it out, get penalized and get taxed, and you'll still be living a better life than pretty much everybody you know.
Right. Because I was trying to figure out what I should, because I'm only 21, and I contributed all the money that I had and something left over, around 3,500, into just a regular Fidelity brokerage account. And I did a lot of research with the stocks that I bought, and I've grown that, not even touched it, to around $16,000 with my initial investments. So that's why I'm trying to figure out whether, I should start opening up like a Roth IRA and put that money away, or sell the stocks that I have, because I'd be taxed either way, right? If I sell it in my individual brokerage, I'd be taxed, but then I can you transfer the stuff that
No,
you have? No,
can't
right?
transfer profits.
Oh shit. Okay.
You're just gonna need to pay taxes on it, but open up the Roth account.
Right.
I mean, you're 21. You've got
Yeah.
so much time to build that account.
Correct.
I mean, look at the spreadsheet that I created based off of monthly and yearly annualized returns. If you hold something for 10 years, I mean, 10 years making 30% returns a year, you've got $500,000.
Right.
You know,
Yeah, I will say. Sorry, I was gonna say I was watching your video on the IRAs earlier, and like I was looking at the spreadsheet, and it was pretty crazy looking at just like 2.5% gains every month. What it would be after like 10 or 20 years.
It's huge. It's
Well,
insane.
my question is like, if you buy a stock, your only gains is that stock. Like within your Roth IRA, or how does it compound? Oh, because you're putting more money into it every month or so, right?
You buy and sell, recycle your money, continue to do it over and over. It grows monthly. Right? You don't just stick money in and then just let it sit there and
Right.
expect returns.
Rob.
It doesn't work that way.
Right. Oh, you could
Hey,
trade
Hostile.
within it.
Hey, Hostile, let me give a quick example, and this is something that you and I were talking about. So you're talking about compounding gains. This year, I started off with $4,000 in my Roth. I didn't even max it out. I started off with $4,000. Just selling cash secured puts, I have made $3,000. Now, what am I doing? It's not like that $3,000 I'm pulling out with profits. I've been using that to be able to do more and more cash secured puts, right? Here's an example of what I'm trying to do this year. For 2020, I can still add another $2,000 to my Roth contribution, making my overall account value at $9,000. If I add another $6,000 for my 2021 contributions, that brings me to a total of $15,000. Now, here's what I can do with $15,000. With $15,000, just solely doing the wheel on just shares of Apple, I've done the math. Just on one cash secured put per week or bi-weekly, I can make on average of about $1,000 per month on Apple. Yes. Now, at the end of the year, if that is accurate, that brings my account balance up from $15,000 to $27,000. Let's say I still want to continue on with this strategy, and I still want to stick with Apple. I can now do 2 cash secured puts.
Playoff career without a pick. Ends up just 8 short on his 155th attempt.
Hold on.
Needs to go on mute.
Go ahead.
Yeah. So next year, I can add my next contribution of $6,000, and that brings me up to $33,000. Let's say in that time frame, Apple moves up, and now it's trading in the range of 175. With $27,000, now I can do the same exact strategy that I'm doing, but I can do it with 2 cash secured puts, bi-weekly or weekly. If I still keep the same return of an average of $1,000 per month on one contract, now I'm able to do it on 2 contracts. Meaning now my monthly return is going to be $2,000 per month. So initially I'm starting off with $27,000 with an additional contribution of $6,000 per year. So that brings my initial value at 2022 to $33,000. I make $2,000 per month, bringing my total up to what? $57,000 at the end of the year. And then you add another $6,000. And now I decide, hey, I have the amount of money to do 3 cash secured puts on Apple every week. And you keep growing and growing and growing. You see how just in a short amount of time, and just a starting balance of $6,000, or in this case, let's say $12,000, because I'm talking about starting the wheel after my second year, of $12,000 within 2 years, having close to $60,000 to $65,000 in my account. That is what we're talking about by compounding gains. And mind you, I can pull out my initial contribution. So let's say at the end of 2023, I say, hey, I need a little bit of cash. I'm thinking about buying this house. I can pull out $18,000 because that's what I've put in. I can pull that 18 grand right out. Anything in addition, so my profits that I've made up to $60,000, $70,000, anything outside of $18,000, that I'm going to be taxed on by the 10% plus 30%, whatever the Roth's tax rate is. And that's where Hostile and I are talking about, where within 5 to 10 years of contributions and a very safe strategy, you can turn $60,000 over 10 years into very easily $1 million plus. It is not hard to do. And that's on a very, very safe and simple strategy. We're not even talking about doing share swings that take a little bit of a while before you can actually really see your profits. No offense to Mario. But we're talking about, and we're not talking about playing options, naked options where you're buying something and hoping something is going up. We're talking about having enough cash in our hand to say, hey, I'm going to sell a put on Apple, and if I'm assigned, I'm going to turn around and I'm going to sell a call. I don't care about owning the shares. Ownership of shares makes no difference. All I want to do is collect my premiums to grow my value of my Roth. That's all I'm trying to do. A very, very safe and simple strategy. But 60K over 10 years can very easily, on just something like Apple and running the wheel on, can yield you $1 million, as long as you continue to increase the amount of contracts that you're purchasing. I'm sorry about my kids, guys. But that's, I wanted to really drive that point home, because I think that should help understand what we're talking about when we're saying your compounding gains in your Roth.
Yes. So I have a question about that. So just to kind of sum it up in my head to understand it. So it kind of falls in lines of like you buying a property. You know, you're purchasing a property, you take out a mortgage, right? And you're putting money into that mortgage to pay off that mortgage. When you come to sell the house, you're getting that initial investment back, non-tax. You know what I'm saying? Non-tax in a sense. Is that what you kind of mean by that?
No. That's like buying shares, and then they turn a profit over the next 10 years, and then you sell it then.
Right. What we're talking about is just taking your initial investment, accruing wealth in your initial investment, adding contributions to your initial investment, and then utilizing your balance at the end of the year to continue your further growth.
Okay.
So just think about you were talking about your Fidelity account, guys.
Yeah.
Can you guys go over there for 5 minutes, please? So you were talking about your Fidelity account, right? You started off with what, $2,000 or $3,000, and you grew it to $16,000.
And I grew it to 15 grand right now.
Okay, so today, when you look at something and you're considering, hey, I want to buy 100 shares of something. Well, guess what? Before, you only had $2,000 and you couldn't afford to even buy 20 shares of something. But now you have $15,000 in your account. You can afford to buy 100 or even 200 shares of the same underlying. Why are you able to do that? It's because your account has compounded, and you're able to use that larger amount of capital to make you more capital. That's what compounding means. When you talk about
he hasn't compounded that though, Faith. That's just in something he invested in, and then it grew over time. He hasn't bought and sold it.
Okay.
Isn't that right, Eddie?
Okay.
Yeah. I invested in a few penny stocks, CleanSpark, a couple like pharmaceutical plays, and they've taken off. Unrealized gains.
Let's think about it this way then. Let's look at Cal's 500 to 10K challenge. Start off with $500. You go from 500 to $1,000. What do? You pull out $500 and you put it away somewhere. Now you're still starting off with $500, right?
Right.
You grow that $500 to now $1,000. You pull out that $500, you put it away in the second brokerage account. Now you have $1,000 in another brokerage account that you decide that, hey, I'm going to start playing Mario share swings with.
Right.
And you're seeing the pattern here. You're growing one account, putting it into another account, and now you're doing two plays, two separate categories of plays. That's compounding gains.
Right.
You're taking the gains and you're adding it into something else to make yourself even more money.
Right. Okay. Because I use the options. I have a limit of like around $3,000. I always start with 1,000, and once I get to $3,000, I'll take $2,000 out, and that's when I look at putting it away in cash. But now that you guys helped me out with a Roth IRA. That's something that I'm definitely considering to do.
Yeah, and I'm telling you, like this is something I literally was talking about this with Hostile just two or three nights ago, where right now I'll be quite frank and honest with you, I'm still reluctant to put money into my Roth, and it's Hostile who continues to push me to put money into my Roth. I'll just be frank and honest with you guys.
Right.
And it just so happened, it struck me the other day. I said, with my Roth, I want to be pretty safe. The cash secured puts that me and Hostile typically play in our alerts tab, they're high IV stocks. They're technically considered to be quote unquote meme stocks. But the reason why they play so well for us is we catch them at support. We watch the pump. We watch the high IVs. We get the theta decay and we make money.
Right.
But truthfully speaking, I don't want to get stuck with shares of some meme company. Like, for example, and no, I did not make a play on this, but let's say, for example, I don't want to get stuck with shares of GME at $40 in my Roth IRA. It's dead money, right?
Right.
But I can play something like an Apple or a Microsoft or another blue chip company that I don't care about the price of the shares. All I want to do is just wheel the stock. I'll sell puts until I get assigned, and in the interim, I'm collecting premium. And then when I get assigned, I'll sell calls until they finally get assigned. They go away, but I'm collecting premium. And in the time frame, I collect $1,000 in a month, or $2,000 in 2 months, or $4,000 in 4 months, 6 in 6. Before I know it, my $15,000 account is now $21,000. And let's say, hey, I don't want to play Apple anymore. I want to play Microsoft. Well, now I have $21,000. Microsoft is sitting at $220.
Right.
I can afford to play it. Before, I couldn't afford to play it.
So doing
now
that
I can.
Your Roth IRA is something that you'd recommend, is purchasing 100 shares or something, having cash on in that account just to cover anything in terms of getting assigned to the shares, and then sell secured puts within your Roth IRA.
Yeah, absolutely.
Wait.
Okay.
I
don't really know.
You don't buy the shares first. You sell.
You're selling the put. Yeah, you're selling the put. You collect the premiums, and only if you're in the money at expiration do you actually get assigned shares. And you already have the cash in your account. That's why it's a Roth account. The Roth, you can't play more than the amount of cash that you have. For example, I have $15,000 in my Roth today. I can go up to a 150 strike on Apple. If Apple crosses over 160, or 150, I can still only play up to the 150 strike. And after that, if Apple blows through it and goes to $200 and I'm trying to play the 150 strike, I'm not going to get any premiums. And so it's not going to be worth me playing it anymore. So that's the cash that you have in your account. You keep selling those puts, collecting your premium until you're finally assigned. When you're assigned, you keep the 100 shares in your Roth, and then you go on the opposite side, you sell the calls. And you can go at the money, you can go a little bit further out the money. But again, the whole purpose is you're collecting the premium until those shares finally get called away from you. You don't care about what the upside's going to be. You don't care what the downside's going to be, as long as you're collecting your premiums. That's the key point here, is as long as you're collecting your premiums and you're growing that Roth account to a point where eventually the shares get called away, and now you're doing the wheel again. Now you're selling the same puts until you get assigned. And in the interim, you're collecting premiums along the way. That's your profit.
Right.
Cool. So you basically recycle your money over and over and over.
Right.
Like if I sell a cash secured put, it finishes out of the money, I collect the premium. That CSP expires worthless, for example. Then I get back into a new CSP. So I'm recycling that same amount of money again to build more premium and grow my account.
Right.
So that's compounding.
Right.
By the way, guys, you guys see me I in my alerts, and I'm not trying to make this about a selling premium lecture. I just so happen wanted to jump into this question.
Oh yeah, I greatly appreciate you doing that, because I mean this is another point of where I could start my experience. I never did cash secure put, so I really.
But I'll give you an example. That $4,000 I started off with, all I did was play TNA, which is a 3x leveraged ETF that I would sell puts against it weekly, and if I ever got assigned, I would just sell calls against it weekly. And that's the only strategy I did to make $4,000 turn into $7,000 in literally a matter of like 5 months, 4 months. That's all I did. It's a very simple and easy strategy that you guys can do. I don't suggest utilizing weeklies, but you can do weeklies if you're doing a blue chip stock like Apple. Nothing wrong with that. Because again, you're not doing something specific to catch support, catch resistance, and just make money here off the stock itself. This isn't something like what we do in our alerts where we're just trying to gain profits.
Right.
This is a wheel. You don't care what the underlying is. As long as it's a stable underlying that stays relatively range bound, you don't care about the upside. You don't care about the downside. You don't really care about shares. You just want to grow your account. The wheel strategy allows you to do that.
Right.
Watch the video that we made on my channel.
Mm-hmm.
It is called the wheel strategy.
Okay. Yeah, I'll definitely look into that. I thank you guys for talking to me about this. I really didn't know. I was really curious about the Roth IRAs because I use my Fidelity brokerage, to kind of grow my account, and I'm going to use that money to kind of put money down on my first house. But I think the Roth IRA would be something that I could look into, and just putting money away to have, in the future. But
Mario.
Yes, boss.
Floor is yours.
Oh, well, thank you, FaZe, as always, for jumping into my lectures.
And thank you, Mario. Thank you.
No, yeah. Everything, by the way, everything FaZe says is true. I actually got really intrigued with cash secured puts because of what he's been teaching me and what Hostel has been teaching me. And again, I am just teaching you guys what I have learned from everyone here. I didn't know anything when I first started. I remember being at my work and jumping into Hostel's lectures and Q&As to learn about support and resistance. Like, that's how I started. So the same guys who are asking these questions, I was in your shoes. So yeah, Eddie, if you can get into getting a Roth, especially at the age of 21, dude, by the time you're 30, I can't wait to see how much money you have in your account. Like,
I hope to have a lot. We'll see.
Yeah, I'm excited for you. Like, this is my second time my second time being able to max out my Roth IRA, and I'm excited for that, right? And the money that I'm able to play. And again, it doesn't matter what you guys do, whether it's CSPs or trading shares or covered calls. Like, I just want you guys to do it safely and make money consistently. And if you can do that all while tax free, then why not, right? It's a win-win for everyone.
Right.
If anyone had any questions regarding about trading shares or swinging shares, emotions, any of that stuff, I'd be more than happy to talk about. If not, we can definitely, give the floor back to Hostel and we can go from there.
You can keep going, Mario. I mean, if you got more stuff you want to go over.
Well, I mean, honestly, because I came back from Reno, I was like almost afraid that I wasn't gonna even have time to make the lecture. But oh shit, Stock Daddy's in here.
Hey,
Sorry.
I asked a question, Mario.
What's up?
Like as far as emotions, I know you said emotions. I want to ask, like, what's a good, what should I say, perspective? Like when because my trade, a lot of times my emotions would cause me to cut the trade short, and I miss out. I know they say all profit is good profit, but I've got such a habit of cutting so early that it seems like I miss so much. You know what I'm saying? What's some perspective that I should put into play to kind of help me, not cut so early?
Are you trading shares, options? What are you doing?
Options, and sometimes I trade some shares, and I sometimes my emotions will come in play, and I cut too soon.
I don't know if you watched my lecture last week, and maybe the guys who are in here who didn't watch it last week can benefit from it. This one hurt beyond, right? So this was such a beautiful play that we caught, and everyone who was in it made a lot of money. I know FaZe made a lot of money off of this on his CSPs as well. My target price was 136, and I got it out at 136. It kept going to 144. Would you consider that cutting too early?
Yes, I guess that right there is preferential, because if you had a target price, and I think you kind of answered my question, not even trying. I guess what I have to do is set a target price, because I'm still fairly new. I've been trading for months, but I'm still fairly new. and I guess sometimes I see the stock drop, and I have what I want in mind. I have a target price, and once I begin to see it drop, once it go back up, I'll be scared, have FOMO, I guess you should say, and I sell, instead of waiting for that target price I first set. But I guess you kind of answered it right there.
Well, I'll elaborate two things on that. You're never wrong for taking profits. In fact, I encourage everyone to take profits regardless of what you're trading. You will never go broke taking profits. You will never go broke taking profits. Like, I cannot repeat that enough. It's the reason why I'm still here. It's because we're constantly taking profits. We're not taking any losses. It's how I have the ability to have, my portfolio last, before I got reset at 68%.
Right.
Because I wouldn't take any losses at all, regardless of whether it's shares or options. Those little things add up. And I'll put this perspective, and I said it earlier, and I don't know if you were here. We always think a stock can go up, but we never really visualize how much a stock can go down. We're like, oh, we missed $4 or $5, $10 change, but we didn't visualize a $4 or $10 drop. And I don't know why we don't do that. We never consider the negative. And I'm the positive guy, and I don't want you guys thinking negatively. But why do we always try to look for the positivities and how much higher a stock can go up instead of how much lower a stock can go? And when you look at things in that perspective, I think it kind of humbles yourself.
Right.
And it's like you're happy for taking that profit, regardless of it ripping later, because it ripped up. But what happens when that shit rips down?
Yeah, you're right.
That hurts. That hurts more than anything else. When it's what hurts more when you have profit, and then you lose that plus more.
That's a fact.
You know what I mean? That right there. That I hate that feeling, and I never want to feel that feeling again. So that's why, regardless of what's happening, I'll set my target price. Sometimes it doesn't hit it, and I'll take it a little early, and that's okay. And sometimes it clears through it. But you have to respect it, because on the day of the correction, or on the day where we have a really bad red day, and you don't respect your stop losses and you don't respect your take profits, you're gonna lose money.
I got a question for you, Reverend. Are you doing shares or options?
He said both, actually, Hostile.
Okay. Well, if you're doing shares, if you're what you're specifically referencing right now is shares, you can set trailing stop losses once you hit your profit target. That way, if it keeps going up, you don't have to, your emotion is eliminated, because that trailing stop loss is going to continue to add profits to your coffers until it decides to start retracing. And when it does, it's going to initiate that trailing stop loss, and you're going to have made more money had you, instead of taking profits early, you would have made more money if that trailing stop loss is in place to follow the stock price upwards, assuming that it goes beyond your profit target.
Can you repeat that again?
The
V5
stop loss or what?
Yes.
Also,
So-
if you can repeat doing stop losses for her.
Yeah, sure. So trailing stop loss, I guess I'll explain it specifically on what it is, why you would use it. So let's say, for example, looking on Mario's chart here, the bottom there for BYND was, say, 115, right? And let's say that profit target was the first big candle up. What's that? What's the top of that one? What's the top of that one right there? I can't see the price, Mario.
This one right here was like 142.
Okay. So let's say you got in at 115. Stock price hits. Matter of fact, hold on one second. I'm trying to see what's that. So Mario, trying to think how to explain it to you. Yeah, open up the. Yeah, there you go. All right, now, try to get an average between 136 and 142. Give me an average area there. So go a little bit higher. Go a bit higher. Right about there. That's good. 140. So let's say 140 is your profit target, because I always recommend You see how you got those peaks there on that section prior to the entry of 115. You never want to go for the tops. You want to go for before the tops because chances of it going to the tops are sometimes slim. So I would say 140 is probably a good area. So let's say you got in at 115, profit target's 140. As soon as you hit 140, you set a trailing stop loss. Now that trailing stop loss is going to do is say, basically, I want to take profits if the stock price drops 5% from where it's at. Or, I'm sorry, 5% from the profits that you have. So let's say, for example, just to make math easy, you've got $100 in profit, right? So when that stock price drops to where your profit's at $95, it's going to initiate that trailing stop. However, if the price keeps pumping and goes to $200 in profit, well, now your 5% stop loss is $10. And instead of having stopped out at 95 and the stock price flying higher, now it's going to stop you out at $190 in profit if it drops 5% on the profits. Right, so that trailing stop basically says I'm willing to take profits on this amount, which is 5% less than the current value of it. Right, now if the stock price continues to fly, it's going to follow that. It's going to follow that price all the way up until it reverses. And once it reverses and you see that 5% loss in your profits, it's going to initiate that stop. That's with shares. Options, it's a little bit different because there's more than one thing that affects the value of the contract. All right, so
Okay,
stop
and
losses on a. Sorry, ask your question.
So, because I am a novice when it comes to charts and stuff like that, and I have Webull and I also have Robinhood. So if I'm playing out of Robinhood, is there a way? How can I do this from the Robinhood platform?
So,
or is it more beneficial to be looking at the charts? I guess I'm new. I'm sorry. So I'm just trying to get a clear understanding. Like, what am I doing wrong?
well, I would say using Robinhood is the first mistake.
Okay.
Second thing is use Webull because it has charting. You know,
Okay.
Robinhood, there's no charting, which is
Right.
awful. So learn charting, right? And I've got videos on charting. Very
Okay.
easy to understand how to learn support and resistance. Mario has taught it. I think every single with the past 3 lectures he's done, he talks about support resistance. So there's plenty of education. Once you watch it and understand it, get the concepts, feel free to come back to these live Q&As or these lectures and ask questions and to confirm and verify that you are understanding it as you're seeing it, right? So after that, then you can start looking at entries and exits, right? So entries would be a bottom or a support area with shares, and exits would be a resistance area, which is what we're showing here, the $140 mark from 115, right? So that's where you would set trailing stops, for example. So for me, had I got into BYND, I was trying to, but that's a different story. Had I got into BYND, I would have set a trailing stop right at 140, and it would have went higher to 144, and then it would have stopped me out probably around 142, 143. Right, so that's how you maximize your profits with shares. Now with options, unfortunately, it's a 50-50 chance, right? Because options implied volatility affects the contract price. The price of the stock affects the contract price. The bid-ask spread affects the contract price. Open interest affects the contract price. Right, so there's quite a few variables that go into it. So trailing stops with options, it's a different ball game, right? But shares, it's clear cut and just super simple. It's just based off of stock price. You make a certain amount of money. If you're willing to take a 5% loss on the maximum amount of premium that you're currently at, it will stop you out, guaranteed. Even if it goes past it quickly, it's still going to stop you out. The moment that it hits a point where it's able to sell, it's going to sell it. right? Chances, like, I've never been in a position where a trail and stop loss didn't initiate exactly where I wanted it to, right? Unless there's just not a lot
Oh,
of liquidity.
okay. So I guess the first thing would be I would probably have to transfer my Robinhood account all over to my Webull account and just start playing out of my Webull account versus my Robinhood.
Yeah,
Because most
definitely.
okay,
Because I
okay.
mean, again, you can't do chart analysis, and
No, you can't.
that is like the number one thing that all traders should be able to do. You won't make money if you can't read a chart.
Right.
All right, if you can't plot where you're going to get in and where you're going to get
Mm-hmm.
out, you're not
Mm-hmm.
making money. It's
Right.
like driving a car with a blindfold.
Right. No, that makes sense. Totally. Totally makes sense. Totally.
Yeah, Shervon, go to my last lecture. I really take my time in explaining support and resistance, and I've gotten a lot of good feedback on people who have watched it.
Who's speaking?
So
Is this
Mario,
Mario?
yeah.
Okay.
Mm-hmm.
I think that was on what was that day, Mario?
I'll try to find it and I'll post
17th.
it. Yeah,
So
but I really took my time.
I think it's my on the 18th I posted it.
Okay.
I believe that's the one. Yeah, 117. So it kind of
Yeah.
bleeds into my live Q&A, but his is the first hour or so. Actually,
Yeah.
Mario did about 2 hours that day. Ha.
Yeah. I wanted that overtime, you know. But funny enough, well, Stock Daddy wasn't here, or I think he just left. But I'll continue Rev what he taught me, and he always said treat trading like a business. And with that, you should know your entries, your exits, how much percentage you want for that trade, and how much your potential loss is for that trade if you were to have a stop loss. And I've said it once, I said it again. Treat this like a business, and it'll pay you like a business. If you treat it like a hobby, you'll get paid like a hobby.
Right. Thank you.
Of course.
Also, ma'am, when you get ready to do that transfer, just make sure you have a lot of unsettled funds in your Webull because it can take over a week. I just did that.
You said it
Just
could
some
take
heads
over
up.
a week.
Yeah, and then
Yeah.
close out all your positions of like at least mainly your options. Close them out if you can. Shares, I mean, you should be fine, but even then, when you transfer, it can take a while.
Okay.
Yeah, Weeble's not very quick with transfers, unfortunately.
Okay.
Cool, guys. Well, if you have any last questions regarding the topics that we were talking about, like I said, next week you will be getting a way more technical lecture. I just need to find the examples. I don't want to just make up examples. And I think you guys are going to get a lot of benefit from it. So just be patient with me. But if not, Hostile, I'll let you take over.
Well, if nobody's got questions for you, they're not going to have any for me.
Well, I want to ask this. Is it possible to set a trailing stop loss on a play on Thinkorswim?
Absolutely.
A mobile Thinkorswim.
I'm pretty sure you can. Yeah.
Yeah, you should be able to.
Okay.
But again, remember, if you're doing options with
Set up
trailing
your
stops,
brackets.
options with trailing stops are going to be 50-50 chance it initiates.
Oh, got you.
Shares will definitely.
Got you. Okay. Well, that helps. That still helps. Appreciate it.
You're welcome.
I got one quick question for Beyond Meat. Do you think there's going to be some sort of retraction from 140?
Hold up, Nitro. There was two people talking, but yeah, there should be some type of correction. But also, I'll give you the floor so we don't interrupt each other.
Sure, of course. Well, here, let me share my screen since I got Thinkorswim up here. Remember, I am still streaming, so that won't disappear, but my screen is now sharing. I actually took the liberty of drawing a couple of gaps here on BYND that I expect to be filled. There's a downside gap that I think will be filled before the upside gap will. And I'm thinking somewhere around 125 it's going to come down to. And then at some point, it's going to hit 150.
Like a sharp retraction down and then a sharper
It's kind of hard to hear whoever was trying to talk.
Hostile, can't this be a cup and handle and continue to go up?
It could. It doesn't look like one though. I mean, I guess it looks like one here. But always remember, gaps get filled 100%. Always. Now, how quickly they get filled, that's the real question. Because BYND still has a gap to fill down here to 101. So I think at some point we're going to see that happen too. I mean, you gotta remember, from the high of BYND at 197, it's in a downtrend, right? I mean, it's kind of gone neutral in a sense. So it fell, created a lower low, a lower high, fell, created a lower low, and then it went up, filled that gap, right? And then it went neutral, dropped some, and then pumped again. It's trying to retest this gap area. It may fill that and then come back down, definitely fill this middle one. But at what point do we fill this bottom one here? This is the one that I'm watching because I want to get in when it fills this one. This is my area that I'm very interested in.
Maybe it'll end up in a long-term head and shoulders, and then it'll fill it then.
It's very possible. And to be honest, the market's been pumping for 3 months. We should see a pullback. Some people are saying March. Some people are saying May. I'm saying February. But who knows? I'm a little aggressive on the bearishness because, let's be honest, I want bearishness because that means I get to have quite a few delicious entries. I don't have enough money for all the entries that I want to get into.
Hey, Hostile, can you take a look at Run? I think there's a gap that needs to be filled on there too. Curious what you think about it.
Run?
Yeah, RUN. I think there's
there's a gap. Down to 72, 73. Definitely.
So that'll be filled eventually at one point.
Yeah, I mean, that's the thing. Like, it's hard to determine when the gaps do get filled, and I'm only seeing it on the year right here. So it's not terribly big, but it's there. I mean, we're at 86. That gap needs to be filled down to 73 area. I mean, you got this little wick right here that puts the price point at 74.80 maybe. Let me get a little bit closer and I can tell you for sure. $74. So, I mean, we're not far from it, right? 86, 74. I mean, kind of right in the middle of the stock price is basically right in the middle of the bottom of that gap to the top of the high, right? So let's be honest, it could go either direction, and I think it will go down. But who knows? Gaps do get filled, though. Always remember that. It's just a matter of when. That's the only question about gaps.
Got it. Thanks. These are my lucky ones. I bought it at 14 like 3 years ago.
Did you sell it at 100?
Nah, I still have them.
Well, I mean, looks like it's doing well, so it looks like it's doing well. I mean, I think it will probably fill that gap before it retests highs. I mean, lower low, lower high. I anticipate it to create another lower low. So
sweet, thanks.
No problem. Wasn't there somebody else that was asking a question when Nitro was asking? There were two people that were talking at the time.
Yeah, that was me. I just DM'd Mario. He answered it, so we're all good.
All right. All right. Okay, who else has questions?
So I got another random question. I don't know if you'll be able to answer it, but I mean, do you trade outside of your Roth IRAs? And the question for that is obviously if you're trading, you pay taxes on it. How often, like a rule of thumb, should you actually be pulling money out of your account to pay those taxes?
I never pull money out. I always let the accounts compound.
So you just cover the tax bill when it comes from whatever you have from regular money?
Yeah. I mean, let's be honest. The money that I make at my job covers whatever I need it to. I've positioned myself financially to be able to do everything that I need to do with comfort. I don't put money into the market that I need. I don't If I'm going to make money and I need to pay taxes, I've got the money to cover it in my bank account so that I can continue to grow that money. But let's be honest, you can also there's ways to um, lower your taxable income. I never recommend 401ks. Absolutely not. My favorite thing for lowering your taxable threshold are health savings accounts, right? You get a high deductible health plan. You get enrolled into a health savings account. I can invest up to $7,000 into that account. That's completely write-offable. That's my favorite tax deferred account. And I max that out every year, right? And I have yet to turn it into a tradable account, but you can. I can most certainly turn that into a tradable account. And it's basically a traditional IRA with the exception of I can spend that money without paying taxes on health or medical reasons only until I turn 59 and a half, from which I can pull from it like a regular traditional IRA. So if anybody's going to go and commit money to a tax deferred account, that's what they should be putting their money in, not a traditional, not a Roth. I'm sorry, not a 401k. A Roth, you put taxed money for retirement, and a HSA, you put untaxed money, and that lowers your taxable threshold. Right. My goal with, and kind of in relation to the question you asked, Roth and brokerage account, when do you pull money out of the brokerage? When my brokerage account is making $100,000 a year, I'm going to be limited at that point from putting money into my Roth, right? Because it's $213,000 that you are allowed to make taxable income. Anything over that, you can't contribute to a Roth. Right? So once I get to that point, hopefully I already have $1 million in my Roth by then. But if not, I'm probably just going to stop trading the brokerage because the retirement account to me is way more important. Right? Priorities for me is non-taxed income so that when I do retire, they can't take money off my plate. I can just, it's all free money at that point. Right? There's no taxed money. And then once I quit my job, once I get to a point where I'm making $100,000 in my brokerage account, I can quit my job, and now I've just freed up basically another $100,000 of profit potential because my job's no longer affecting that top number, right? So I have a strategy and a plan on how to get to where I want to get, and there's I don't want to call it red tape. I would say it's more like a speed bump because if I do end up making a lot more money in my brokerage account to where I'm putting myself over the $200,000+ mark, that's great. But if I'd make it faster then the Roth is getting to $1 million or more, then, I'm going to have to pull back on it. Because again, the Roth is more important. But the beauty here is once I hit that $1 million to $2 million mark on my Roth, every dollar I've contributed to my Roth is coming out and going into that brokerage account. And now I've just increased the profit potential on that brokerage account exponentially. Maybe not, 100 times or 10 times or whatever, but still, like, let's say, I've got 2 Roth accounts, one for me and one for my wife. So 6,000 times 2, I put $12,000 a year in the 2 accounts, basically. So in 5 years, if I have $1 million on both accounts, I'm basically going to be pulling out $60,000 and putting it into a brokerage account. And now I've turned that let's say my brokerage account's only $50K. Well, I just turned it into $110,000 with that contributions from the Roth. So I got $2 million in my Roth, and I got $110,000 in my brokerage. I can easily make 30 to 40% on that brokerage account. So now I've basically and the money that I contribute every year to the Roth is now going to go into that brokerage, because now I don't have to contribute to Roth accounts anymore, because now they're $2 million. And if I'm only making 30% off those Roth accounts, we're talking $600,000 off of 2 million. So what is $6,000 at that point? $6,000 will go a lot farther in my brokerage account. So never ever pull money out if you don't have to. If you can afford to keep the money in there and continue to let those accounts grow, the larger they are, the more money you make. That's as simple as that. I know I've heard somebody earlier talking about, well, I want to pull money out of this account and I want to put it here. And great, if you're doing that and you're going from a brokerage to a Roth, great, max the Roth out. But don't be in the position where you're just pulling money out of the brokerage. So let's say you've maxed your Roth and now you're still wanting to pull money out of the brokerage to just take profits, take money out and be like, oh, look, I'm going to go buy a new jet ski or something, right? Don't do that. Continue to leave the money in there so it can compound. This game that we're in, it's all compound interest. That's what we want, or compound returns, I guess is the better way to describe it. This is what we want. Do that to where all of your accounts are $1 million plus, then you can start pulling money out. Now, again, if you've got 500K and you made $250,000, you're probably going to have to pull some money out to cover your tax requirements, right? If you made $250,000, the government's going to be wanting a substantial chunk of that. So, let's say your job, you only make $70,000 a year, and you made $250,000 on your brokerage account. That $70,000 job's not going to cover.
I'm moving to Puerto Rico.
The taxation. Well, you could do that too.
Yeah, that makes sense. Thanks for that answer. So, basically, just if you can afford it, and yeah, that's probably what I'll do.
Absolutely, yeah. If you can afford to not pull money out, that's the way to go. But if you have to, then you have to, right? You don't have a choice. Government's going to get theirs. But here's the beauty. If you have to pull money out because you've made that much, you're doing something right.
Yeah, got it.
Hey, Hasta, I just joined like a minute ago while you were talking about the Roth and stuff. Are you going to be charting like any stocks today or anything?
I prefer questions, but I'll chart.
Oh, no. I was just wondering if you were or not.
I may or may not. It depends on whatever type of questions I get. Again, I prefer questions, but I don't mind charting.
Well, that's okay. I was going to think of something, but about the Roth, I had a question, but I forgot it.
So I got another question for you, and it's another tax question, kind of. So like that instance that I said, like run, I bought it at like 14, and now it's sitting at 80. So I made like $3,000 or $4,000 on that. You don't actually pay taxes until you sell it, correct?
No,
Correct.
Yeah. Okay. So as soon as I go to sell that, that's when I'm going to be hit with that tax bill.
Correct.
Got it.
And there is a
Go
time
ahead.
frame there, right? So if you hold those for 366 days, then you're only required to pay the capital gains tax, which is 20%. However, if you sell it 365 days or less, it's going to become bracketed tax, which means whatever your income tax is. So if you're making $90,000, whatever bracket you fall into, that money is going to come. You're going to have to pay taxes on that bracket. So it's income tax brackets for 365 days or less. 366 days is 20% capital gains tax.
Got it. Luckily, I've had it longer, so that's good.
Trying to hold it for 3,060 days. You know what I'm saying?
Well, you're only required 366 to hit that 20% capital
Yeah.
gains tax.
How was your weekend? Is that a good question or not really?
It's fine.
Yeah. Also, I was trying to ask you earlier about pets because I was mentioning it to them. It's a it's a really good ticker that you like to trade, but I don't know if we missed the 29 because it never hit 29 exactly, or if you think it might come back down again. That was like my only, if not iffy thing, but I told them to keep an eye on it.
I think it will, man. I mean, look at the. Let me clear these drawings, and I'll show you.
You're like blurry for some reason, but I can kind of see it.
So this whole entire area has went under 29, right? And when it dropped, every time it's dropped, it's come really close. And what I think is going to happen here is I think we're going to see red on it. It's going to come back down. Pets likes to kangaroo around. Once it does its ER drop, it loves the kangaroo. Right? I mean, look at this right here. This last time ER happened, kangarooing. I mean, look, how many times this thing broke 29, right? Let's see, and it just barely did every time. Don't get me wrong. I mean, but it broke it once, twice. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Right on 20 times. I anticipated to do that. I don't see it not doing it.
Yeah,
I did see it
believe
pump,
it,
and I was kind of like, man, it was so close too, right? I mean, it 29.30. I think last time I got into pets, I got in at 29.30. So it's kind of funny that it stopped right there. But can't get them all, can't catch them all.
Yeah, and that's what I was trying to tell them, that it's really hard to watch all of them. Like we can only do so much.
Right. And it's okay. I mean, heck, you could go for some CSPs. It's paying $120 right now.
No, see, that's the thing. I should have done that with CRSR. I was so busy trying to buy the shares that I didn't bother looking at the CSPs, and I'm pretty sure they probably would have still been paying good.
Oh yeah, CRSR was paying $450.
Yeah, and that's the thing, right? Like I wanted it so bad at a certain price, but I have to remember that there's other options to to play with, literally, no pun intended. But I should, in hindsight, I should have done that. If it passed my entry point, but the premium is still good on the CSP, then I might just do that.
Well, I was gonna say, this should be your process: is the premium worth it on a CSP? If it is, take it. If it's not, go for the shares.
Yeah.
I missed it. I'm so mad that I missed it.
Dude, you should have seen me that day. I was blowing up the trade floor because I couldn't get it.
Man, I miss everything. Don't worry, bro. If you only miss a couple of them, you're straight.
I was watching that one for so long.
I'll be honest, I missed quite a few.
Don't worry, bro.
Let's see.
If you're at
Check this
99% like me, you're good. You're not good. If you're under it, you're good.
I missed CRSR, DBX, Fastly, Jamia.
Oh, I miss JMIA so bad. Fuck.
QS. Well, actually, no, I got into QS. Take that back. Ride, I missed. And TNA, I missed. So it just happens that way. Sometimes you miss 99% of the ones you're looking to get into, but I did get into one.
You know, Hostile, wise man once told me, you miss 100% of the shots you don't take. So if you don't take it, you'll never win, man.
Well, it's not that I didn't take it. I just wasn't there to see it.
Well, yeah, I know. I'm just saying, like, if you don't take any of them, you're not going to win at all. You know what I'm saying? You miss 100% of the shots you don't take.
Well, it's just like you never win the lottery if you don't buy a ticket.
Exactly, yeah. That's why I bought a couple Powerball and Mega Millions tickets this week, but I got burned, man. Fuck that.
It's
Hey,
rigged. It's rigged.
yeah, it's all rigged. Hey, some guy bought a ticket and won the $1 billion lottery 10 minutes from my house. And he doesn't even live in the state. I got so mad when I heard that. It's from
It's
like
rigged.
Boston. Yeah, bro. I bet you that guy's giving all of the money back to the Michigan, or to the government, whatever.
I was going to give it to Michigan and Boston.
Yeah.
Anyways, also, I think I'm gonna head out. I'm just exhausted from my trip.
Yeah, man. Take care.
Have a good night, brother.
Thank you, guys.
Take care, man. Hey, Hostile, can you check out what is this one? SMSI. With it's like a 5G wireless company called like Smith Microservices or something like that.
I don't like anything under $10, to be honest with you.
Say it again. I'm sorry.
I said I don't really like much under $10. Like those kinds of stocks are sketchy to me.
It's a 5G company.
It's got a gap to fill at $6. It's almost at the third standard deviation channel. It's pretty overbought. MACD is pretty wide. I expect this to come down.
It's up pretty high, you think, right now?
Look at the chart.
Oh yeah, I see that it's up. When was it last that high? Wow. It's
pre-COVID.
Yeah. Interesting. Even with 5G becoming like a, thing of the present, you don't think it'll boom? Well, I don't really know if you even know about this company or not.
Well, I've never heard of them, but I mean, you got to remember everything that's out there popping and being hot. There's a reason why, and it's not for the reasons that you think. Never is.
What do you mean?
It's a smoke and mirrors. It's just like the media. They pump stuff into our eyeballs, but I guarantee you 99% of it's fake. It's only there because they want you to see it. They're hiding the stuff they don't want you to see, which is what you really need to see. So when something's pumping, like 5G, for example, let's be honest. What are they not telling us?
Like about 5G itself, or what are you saying? Probably causes cancer or something, right?
I don't know.
Well, that's what the rumors are that they're saying about 5G. People say about 5G. I don't know if it's true or not. I was just saying.
Well, we don't really know what is true, unfortunately. So everything needs to be taken with a grain of salt, basically, is what I'm getting at.
You don't think buy shares of anything like that? I mean, you just said you don't like $10 stocks, under $10 stocks.
Yeah, I don't really mess with that kind of stuff because, I mean, less than a year ago it was under 4. And
right.
Let's see the history of this thing. It's been under $1 not too long ago, 3+ years ago.
Oh, not even during COVID?
Nah, yeah. I mean, prior to COVID, it pumped to $6 and then tanked. COVID, now it's back up to $6. I mean, when it came out, it was at 53 and then got crushed. It went all the way down.
Really, very bad. Wow.
$3 and some change. So I don't like this. This is ugly to me.
Yeah, all these red candles at the beginning. Look at all the red candles at the beginning. Wow.
It's just IPO'd and then got crushed. That's all that
Yeah.
is.
Huh. Well, thanks for the insight. I appreciate it, Hostile.
Sure thing.
Hey, Hostile.
Hey.
I'm looking to pick up some more AT&T shares as a long-term hold. What do you think at its current levels right now? Do you think it's consolidated enough and it might break to the upside?
I don't know. Earnings are coming up very soon. Look what it does at earnings. Falls. Kind of fell after earnings there. Fell after earnings there. Fell prior to earnings there. So I expect it to drop.
Yeah.
Let's see. There's a gap here at 27.68. I expect that to be filled for sure. Maybe that'd be your entry point. $28, 27.50.
Perfect.
But
I see it now.
I just don't like long term, man. Unfortunately for me, like I just don't like it because I feel like your money can be utilized better somewhere else instead of, throwing. Let's just assume for a second you're going to put $5,000 into it, right? That $5,000 can be utilized in so many other places, and you'll make so much more money than AT&T is going to give you in dividends and or the share
Fuck that.
price.
And plus their stock doesn't like go up like Coke.
Yeah.
It doesn't like, it's just not going up. It just chill. It's just gonna chill at a high yield.
But yeah, I mean, this is a high yielding dividend, right? So AT&T knows their stock's not going to be pumping, right? They know it's not going to rip. That's why they give dividends. They have good revenue. They have, they're one of the second largest, what do you call it, service provider as far as cell phones goes. They are doing internet, but I mean, look at their earnings. They're right on the mark. 88 and a half estimated, 89 actual, and then 85, 84, right? And then 78 and 83. So they did decent there, but still didn't do nothing. And then we're looking at 77 and 76. And then let's see what happens on 27th. But I guarantee you, estimated amount's going to be right around the same thing. The only way the stock rips is if it crushes estimated. Name something that's going to make AT&T crush it. I don't think of any. I can't think of anything. I mean, unless this whole new 5G iPhone pump is going to do something for them, but I don't think it will. I think it's going to benefit Apple way more than it's going to benefit AT&T and Verizon.
All right, thank you.
You're welcome. Now, if you got $5 million, you want to throw $300K at it. All right. Let me take 52 cents per share. Let's see. Let's do some math. 300,000 divided by, let's say you get it for 28. That's 10,714. 10,714 times 52 cents. I mean, let's be honest with ourselves. $5,500 every 3 months with 300,000. That's trash. What kind of return is that? 300,000. Let's see. What did I say? 57. Let's say 5,700. That's 2%. That's trash. That's why I don't like dividends, because they're trash. But I'm not saying you shouldn't do it. I'm just saying your money can be utilized better somewhere else.
So do you personally not hold any long-term stocks?
No, I do not. Waste of time. Time is money, and I'm trying to make some.
So basically, you like to trade the support levels.
Yes.
Got it.
I mean, I can make more money throwing money at AT&T at a support level and then getting out when it hits resistance. I'm going to make way more doing that then I would wait in 3 months for a dividend.
Right, but then you're not looking for AT&T because AT&T does nothing. You're looking for something like that's gonna pop within 30 days.
Yeah. I'd say my time frame is, well, honestly, a week, 2 weeks, 30 days, maximum 2 months. No more than that. I need something. I need returns faster than 2 months. That's really not acceptable to me. Weekly returns is where I'm happy, but I don't mind bag holding something if I have to. I mean, it happens. Like I find myself in a position. I got one stock right now that I've been holding for 4 freaking months because I refuse to take a loss on it, and I know it'll come back up. It's just a matter of time. Right, so
What's that, Pfizer?
Nope. Genus. Shitty ass stock. I honestly went in blind. I followed somebody. I'm not gonna say who, but I followed somebody and it just didn't work out. So
Wall Street bet.
no,
Deep fucking.
it was not Wall Street bets. I don't mess with that either. But you know, it's
Cal.
my own mistake for following someone instead of doing my own research and analysis. And that's what happens. Right? You don't learn how to do it yourself, or you follow somebody blindly even though you know how to do it. There's mistakes and consequences that happen. Right? And you got to be willing to reap those consequences and not continue to repeat the same mistakes that got you in that position in the first place. If that makes sense.
Hey, Hostile, what do you think about Apple this week with earnings?
I think it's going to rip. I hope it rips. I mean, let's be honest. I am up $700 on a leap. So if it rips the way I think it's going to rip, I will be. So I bought this leap for $1,800. I expect it to be $2,000 by the 27th or the 28th, whichever one of those days you want to. So I think my leap's going to turn into a 100% return.
Nice.
I mean, let's be honest. Apple's primed for a pop. Right? It's retesting that high yet again. It created a new high actually. So it's primed for a pop. I think we're going to get one. I sure as hell hope we do because I'm in a leap. So we'll see what happens. But I am seeing a gap down to 132. But that's fine. I'm okay with the gap at 132 because that means if it does fill it, which it could very well within the next few days, it's going to bounce right off of it and then go to the moon. I just see Apple looking really pretty. I mean, look at the uptrend. Right? I mean, it's got a slow but steady uptrend.
Yeah, I noticed that yesterday, and I was thinking about a few calls for this week, and I wasn't sure which ones yet.
150s.
At the money.
At the money?
Absolutely. If you're gonna do, you're gonna do weeklies. It's only $360. But you know, personally, in my opinion, I stay far away from short-term stuff. I like yearlies. I guaranteed see profit on yearlies. This leap that I bought, I've seen profit 3 times, and it's when it went against me 3 times. Right? I've been waiting for these earnings because I know it's gonna be. I have a good feeling at least it's gonna do well. But in between the time I bought it until now, it's went green by $300-400 3 times, and it's went red down to $50 to $100 3 times. So I could have honestly bought and sold that position 3 times and made $1,200, and then now be up 700. Right? So that's
Gotcha.
why I like leaps. If you can afford it, grab leaps because there's so many opportunities to see profits. I mean, right now I'm in a silver leap. I'm down to $84. I guarantee you, this position is going to be 100% return soon. I paid $330 for it. I honestly, I sold a call against it. I made $48, so it's actually worth $290. 282, not 330. So I anticipate $330 premium on that silver call. That's down 25%.
I'm with you.
So buy leaps if you can afford it.
So when you buy a Leap Hostile, you're looking for like 60 to 100% gains on it?
No, not
That's the goal?
necessarily. Not necessarily. This particular one for Apple and silver, I know they're gonna do. I know they're gonna hit. They're gonna go in the money. Actually, Apple's in the money for me. My silver leap is for the $27 strike. I know that's gonna hit it. It's just when, and I think June at the latest. With Apple, I was already targeting the 27th of this month. Right. So honestly, I wasn't expecting it to. I was expecting to just kind of go sideways, do a little bit of up and down, maybe be a little bit green the whole time or a little bit red the whole time. But it's honestly went 25, 40% gains, fallen, been 5% losses, 10% loss, then back up to 30, 40% gains. So or 25% gains. Let's see, what's my percent? Actually, no, I'm wrong. It was probably like 15% gains because right now I'm at 26%. I'm sorry, no, my leap. I got shares of Apple as well. My leap is 39% gain right now. So I mean, the thing is with leaps, man, the theta on this is just so small. A penny, right? $1. I lose $1 a day. Imagine that. $1 a day I lose, and if I go it, so if my sorry, that's the wrong one. I take that back. Hold on, let's see. $3 a day. Right, so $3 a day is really nothing because I expect it to rip pretty hard. I mean, it's in the money, so even if I exercise this position at 130, a year from now, I bet it'll be 160, 170, maybe 200. Right, so a year from now, I could probably even just exercise it and own the shares, right, and then just sell them outright or sell calls against them if I really want to. The shares, that is. So I really, really love leaps. If you can afford it, man, that's what I would recommend. And you don't have to hold it for a year. If you buy a leap and then in a week or two, it shows you 10, 20% return. I mean, you got to remember, you buy a leap and you paying $2,000, 20% returns, pretty decent return, especially if you want to swing shares. I'm sorry, if you want to swing options, leap's the way to go, in my opinion. Always a year out, as long as there's open interest. Always a year out, and go for at the money, as close as you can get for at the money, because that position is going to show profits quicker as far as percentage of time. That is, if you buy a monthly contract, or, something that expires in 30 days, 30% expiration is 10 days, right? But if I buy a year out, 30% expiration is 3 months, or no, more than that, 3.5, maybe 4 months, actually. 4, 8, 12, yeah. So right around 4 months. So I got 4 months of time really to see that position show me 10, 20% returns. I think it's fair to say a 25% return on a leap is probably a very fair expectation and realistic.
Also, on leaps, how much open interest do you need to have to make it interesting, or does it matter on a year out?
At least 1,000, I think. I mean, 500 really, but 1,000. Let's see. I mean, Apple. Look at this. A year from now, my strike has 43,000. That's crazy. Let's look at Baba a year from now. Still in the thousands. BYND. 600's good. I'll take 600 all day long. I mean, this 158, you could still probably get out of that. Shouldn't be too hard. It's just one contract, right? But I'd say 500 to 1,000. I'm feel more comfortable with 1,000 open interest. If it doesn't have that kind of liquidity, probably shouldn't be doing it. Like Citigroup, 16,000, 18,000. Like this one, this isn't something I'd buy a leap on. Cake, it's got 54, 181, 132. I wouldn't touch that. This doesn't even have anything that far. This one's good. Dropbox, 5,000, 4,000, 1,000, 5, 4, 2,000. That's definitely worth it. And look at the price. I mean, $395, and Dropbox. I probably wouldn't get it right now. Like I said, play everything off of support. You buy leaps, play it off support. You sell CSPs, play it off support. The chances and the probabilities are totally in your favor by wide margins. Even if the market goes against you, still in your favor, because you can roll CSPs and you got time on leaps. Right? Let's see. Fastly, 28,000. That's beautiful. I'm sorry, no, that's extrinsic value. Never mind. 200, 200, 300. I would probably be okay grabbing this 105 strike for Fastly, but let's be honest, I would probably go in the money just a little bit and grab this $100 one.
So, Hostile, what's your bull case on silver?
It's been down since September. It's in a bullish market as far as gold and silver. They hit their all-time lows right at COVID. That's what was needed to basically turn gold and silver into a black swan event. It's been years since we've seen gold and silver. Let me rephrase that. It's been years since we've seen gold break all-time highs. It's been years since silver stocks have broken all-time highs. And they all have. Now, the only thing that has not reached all-time highs is spot price of silver. That's the only thing that, out of everything so far, silver is the only thing, the spot price of silver has not reached all-time highs. It's only still halfway there. So it's got time. It's going to. And another thing that most people don't even know about when it comes to gold and silver, there's a gold to silver ratio. How many ounces of silver does it take to buy 1 ounce of gold? Right, so back in 2011, it was 38 ounces of silver bought 1 ounce of gold. At the COVID bottom, it was 130 ounces of silver buys 1 ounce of gold. So when the variation or ratio is very wide, so 130 ounces to 1 ounce of gold, 130 ounces of silver to 1 ounce of gold, that is, that ratio, that's as wide as it gets. I think 140 is maybe, I don't even think we've even seen 140. I think 120 to 130 is about the most I've ever seen it in the past 30 years, mind you. Back in 2008, it was at 115. What did it do? It went from 115 to 38. That's a bull market. So whenever that disparity is there, silver always catches gold in that ratio before it falls and becomes a bearish market again. So anticipate gold and silver to pump. It's only a matter of time. And that's the beauty here. I've got safety deposit boxes in places that I have physical silver stored, 100-ounce bars, 10-ounce bars. I've been stacking them for years, for 20 or 30 years. Since I was old enough to work a job, I was buying silver. And I wasn't buying them in large amounts, but after 20 or 30 years, I've got large amounts. And I've got so much to the point now where it's becoming a hassle to store. So when they hit highs, guess who's cashing out on big ass bars? Me. And that right there that's probably going to net me $100,000 in cash, right? Because when I was buying silver, when I first started buying silver, I was getting it for $2.50 an ounce. It's at 27 today. Same thing with gold. If you were to buy gold at the same time, it was worth $350 an ounce. It's up to almost $2,000 today. Let's see. Actually, let me check and see what it is exactly. $18.54. Silver is at $25.59. So talk about storing your wealth. Let me ask you this. Back in the early 1900s, when gold was probably worth $25 an ounce, you could buy a very fine silk suit for 1 ounce of gold. Today, how much is a nice silk suit? And I'm not talking about Giorgio Armani, name brand stuff. I'm talking about just you go to a nice tailor and you get a good, nice suit, nice silk suit, right? No name brand, just a good, mom and pop tailor that has quality material that will fit it to your specifications. It'll cost you the same amount as it does for 1 ounce of gold. I've checked. So that 1 ounce of gold still buys me the same thing it's always bought 100 years ago, 200 years ago. It's just like milk and bread. I mean, we're talking inflation here, right? They manipulate gold and silver, but don't get it twisted that they can't continue to manipulate it. They can't keep their thumb on it forever. It goes out of their control every once in a while. And when the bull market happens, it's out of their control, right? So remember that storing wealth is different than making wealth because of inflation, right? And they say, oh, inflation's low and there's actually deflation and blah, 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 bullshit. How much does damn milk cost me? $3 to $4 a gallon. How much does bread cost me? $3 to $5 a loaf. How much does eggs cost me? $3 to $4 a carton. And tell me that isn't inflation? Milk used to cost 99 cents. Bread and eggs used to cost 50 cents. When I was growing up, you could get it for quarters. Now it's like, I mean, think about this. Like, you go to the McDonald's. It's like $7, $8 for a combo. It used to be $3 when I was in high school. Nothing's changed. It's still a quarter pounder with cheese with French fries and a drink. And they say inflation isn't happening. We got deflation.
I remember paying $1 for gas.
Exactly. Yeah, I remember 90 cents. I remember riding in my mom's car, seeing that because we had to pass this one gas station on the corner all the time on the way to home. And I remember seeing that light, 90 cents, 95 cents, 90 cents, 95 cents. And this was when I was in 5th grade or something like that. And now you look at it like, I mean, honestly, since Trump has been in office, it's dropped. But prior to him, Obama and Bush, that's been crazy high. So, it's all manipulation. They manipulate everything and they lie to us and say, "Oh, there's no inflation." Okay.
I missed the beginning of this gold silver conversation, but do you think it's going to keep going up as a long-term store? Because I recently just started buying gold and silver too.
It has its bull and bear markets as anything. Right? So, did you hear what I said about the ratios of gold and silver? Danny?
I think that's right where I came back at.
So when the ratios are wide, that's when a bull market's coming and or is a bull market. When the ratios are tight, then it's going to start going backwards.
Got it. Makes sense. Thanks.
That's the best way to judge the gold and silver markets. But the problem with gold and silver is it languishes. It takes time. It'll sit at a certain price for months. The best time frames of the year for gold and silver is May, June, July. bearish times of the year: September, October, November, and the rest of it's just kind of hanging out, kicking their feet up. Anybody else got any questions?
Hi, Hostel. My name's Anna. I'm new to the Discord and still kind of figuring this out. But thank you so much for your live tonight. I've already learned so much. I just have a question. If you can touch upon like two tickers, WKHS and CRSR.
Oh, Workhorse and Corsair. Okay. I still see Corsair in kind of a down. I'm sorry, Workhorse kind of in a downtrend. So I mean, if you look at, I got the year chart up. I can probably pull 180 on this. It's a slow, soft downtrend. Let me go back to the year. It's easier to draw. It's actually squeezing. I take that back. It's squeezing. So I'll go back to the 180 now. It's squeezing up. So it's going to stay in this area. There's supposed to be some news first quarter this year for Workhorse on whether or not they make the deal with USPS. First quarter meaning January, February, March. So anytime now, we should get an answer. My guess is March. Because USPS, as we all know, is government owned. And you know what the government does is drag their feet. I do expect this to, let's see, let me just kind of look at this more. Maybe go sideways a little bit. Maybe fall back down to the $22 area. But I do also expect it to jump back up to 27, 26 area in the next month or so. Yeah, I'd give it a month. Yeah, that's kind of all I'm seeing right now. And that's all I
Gotcha.
know
Yeah, makes
about that one.
sense.
Okay, and Corsair. I think this one's also kind of downtrending in a way, but it's doing a. Let me get rid of this. This is what I'm seeing now on Corsair. So I think Corsair is going to fall again. It's probably going to fall back somewhere to the $35 area. At some point, it's going to do a breakout above this line, right? So I had it short term. I had it like this, and it broke out above that. Right, so that means that this area is irrelevant because it broke that area. It actually hit resistance here, right at 42. So I expected to jump and probably hit this $40+ area and then fall back down somewhere to 35. I really, really like CRSR for cash secured puts. I mean, prior to it pumping the other day, Friday, CRSR was showing me around $450 in premium on CSPs. Right now it's at 300 because the price went up. But that was really going because IV is high. So I really like CRSR, especially when it comes back down to 35. But I think long term this company is going to do well. Nobody competes with them in the computer market. This is straight up computer gaming software. I'm sorry, hardware. And they make all kinds of stuff. Computer towers, keyboards, mice. What they're really known for is RAM. They make graphics cards. They make cooling fans. They make, all kinds of bells and whistles for a PC.
Yeah, I really like it too. I'm definitely gonna hold on for a bit.
You in shares or options?
I'm in shares right now.
I would probably I mean, it's got a pretty tough resistance area at 42 or so. I'd probably set a sell limit at 42. I like to recycle stuff. That's just me.
Yeah, no, I get that. I was actually gonna set it at 40, but yeah, I might push it.
You mean if it hits 40, put a trailing stop on it. Then you can let it ride to 42, and then as soon as it reverses, it'll actually, matter of fact, I think that's probably a better option here, because what if it breaks out above this trend line and then goes back to 52, right? I mean, then you're looking at nice profits. So trailing stop, when it hits $40, set a trailing stop for maybe 5% at that point.
Gotcha.
So let's see if I can show the trailing stop here. Yeah, so like this. All right, that's how you do it. But since you're already in it, you'd have to go to the monitor tab. Actually, are you using Thinkorswim?
I'm not. I'm using Robinhood,
Hmm.
but I did get TD because I am planning on switching over. But yeah, right now I'm holding in Robinhood.
I still think you can do trailing stops in Robinhood. I just don't know how. I
I
really
you
hate
can
Robinhood.
you can yeah, you just can't do it on options in Robinhood, but I'm pretty sure you can do it on stocks.
Okay, yeah, that's what I would recommend. Hit 40 PT and then set a trailing stop on it. Should be good.
Yeah, yeah, that sounds good to me too. Thank you.
You're welcome. Okay. Who else has questions?
You think about Visa? I did do a leap. I think I don't know who was the one that called it. I don't know if it was you or
Was it me?
Dog Daddy. I think it was Dog Daddy. He got in a long-term position on Visa for 820 strike price for 917 this year.
I see a gap that needs to be filled at 198. It looks like it's on its way down there.
Okay.
But if it's in a downtrend, I expect it to maybe hit this support level at 194. But that's not really a strong one. I'd say
Yeah,
strong is like 189. And then
when you also mentioned about the open interest, I went to go look at it and it was really low. So hoping that it goes up a little bit to maybe get out gains.
You said September
17, 320 strike price.
320. Why so far? My lord, that's at the bottom.
Yeah, I was barely starting when I took that. That was one of my first plays that I took.
I see.
Now that I'm learning how to read the charts, I'm understanding a lot better. And yeah.
Personally, I would have gone much closer to at the money. I mean, I have a decent amount of money to play with, so I would have went right at the money, to be honest with you. But I mean, look at the theta decay here. I want to make this so that everybody can understand why you go to at the money if the open interest is there and you can afford it, right? So I'm gonna use your example here. So you had 320 strike. Let's say I got into it today. It's $40, right? 40. So that's what, 2.5% theta decay a day. But if I were to get it at the money, so not even a 1%, way less than 1%, like 0.1%.
I see now.
You see, like
I should.
it's 0.0018, so 0.002 of theta decay, whereas the 320 strike was showing me 0.02. See, that's a huge disparity in percentage of theta decay. This is why you go for at the money, even though it costs more, especially with leaps. You want to get as close to at the money as you can because it's the least amount of theta decay.
I'm with you. Well, this is why I'm taking these courses and going over the classes with you guys every day now. So I'm learning as I go. Thank you so much for looking into that.
Yeah, of course.
Hey, so what do you think about Nike right now? Kind of bouncing off this 139.5 resistance or support line. It's a bit more short term.
I mean, it's pretty strong, that area. You got 3 areas that bounced off of it, plus the where it's at, plus you got a resistance point right here that's acting as support. So technically you got about 4 areas plus where it currently is in price. I don't know. Let's see. Let me go back 3 years. I expect a pullback on this. It's just too high. It's been pumping. It broke through long-term trend. All right, you see that?
Right.
That's the long-term trend line, and it broke through it. So I say 50% retracement from the wave. So if I do this, so we're looking at maybe 122 where it comes down.
Right.
And then let me get closer in. That's too close. And that's right near a really strong support of 118.
Yeah, so get in there, the 118 level.
Yeah, I like that a lot, actually, at 118.
Mm-hmm.
And
All
I
right,
think
thank you.
if it did that, I'd probably grab some leaps on it too. But this thing doesn't really. This is such a slow mover too. It's like AT&T, but it actually goes up.
Right, based on the earnings.
Yeah, and you know Nike's definitely a blue chip stock.
Right, and then yeah, can you also look at CVS?
I expect this to come down. All right, look
This
at that.
74.5 level.
It's got quite a few gaps right here to fill.
Mm-hmm.
One at 58, one at 59, one at 61, another one, yeah, I'd say one at 64, 65. So we got quite a few gaps to fill in there. It's going to fill some of those. So I would expect this to fall.
Yeah, I was just thinking about getting puts on it. Just
Yeah,
isn't that much great open interest.
yeah. I probably I don't really ever give opinions on naked buying options. So
All right,
enter
thank
at
you.
your own peril.
Yeah, thank you.
You're welcome.
Have you already done PLTR?
I'm not really doing charting, but I'm happy to do it. Let's see. Ooh. We'll see what this does. I mean, it pumped. So if it holds that level, expect it to make all-time highs. Expect it to breach 33.50. But this is a resistance area, so I wouldn't be making any moves into that. Wait and see what it does.
I'm already in it. I've been in it already.
You in profits?
Yeah.
So how come you haven't taken them?
I was waiting to see until Monday, tomorrow.
When does your expiration happen?
It's in February.
When did you buy it?
Like 2 weeks ago, I placed a call for it to reach 40.
I don't know. It's at a precipice, right? It's kind of at a point where it could either go up or down. If it holds this area, you got a good chance of it pumping, but who knows? I don't even know why it pumped. So
Okay. Thank you.
I think it pumped
welcome.
because demo day they're having tomorrow.
Hey, Hostel. Hello.
What's up?
Hey, man. So I got to the class pretty late. I have a few questions about Neo. I don't know if you already talked about it or not.
What about
Like,
what about it?
so I'm holding 20 contracts of Neo expire on 29. Should I like keep holding it till like to see if it goes up? Because right now, like I'm 20% down on it.
When did you buy those?
I think it was on Friday. I'm guessing. I think it was stock. Let me see who sent the alert for it. It was Stock Daddy.
How much of that of your portfolio is that taken up?
No, it's like 30%.
That's way too much.
It's way too much.
Way too much. 5 to 10%.
5 to 10.
Because if that goes completely against you, and you lose that, there goes 30% of your portfolio.
So like my average is right now is 66. It was like above 70 when I got it, but I averaged down later after that, and it's 66 right now. But the price going on is 52.
I don't know. I mean, I think Neo keeps falling, to be honest with you. I could be wrong, but it hit its high. It's due for some kind of pullback.
Okay.
It's setting lower lows and lower highs, so
Yeah, it was pretty steady after after I bought it, but I don't know, for some reason the contracts never went up. I
because it's
bought it.
decaying in theta.
Oh, okay.
That's what happens with buying options. You lose value every single day that you're in it.
So should I keep it on Monday, or should I just go ahead and sell it whatever I get?
I don't really know, to be honest with you. I mean, like I said, I'm not an option buyer. So unless you bought leaps, I don't know what to tell you. I mean, you're losing money. You have too much in that position.
Yeah.
You bought a trade when the stock was kind of near a high. So, there's a lot of red flags for me there. And
I think I'm gonna.
I can't begin to tell you what you should or shouldn't do at that position because I don't trade that way. So managing something like that isn't something that I'm like, I just
Do
don't
you think
trade
it's
that
gonna
way.
like?
So
Do you think like it's gonna go a little bit up
I have no
on
idea.
Monday? No, you can't tell.
Wish I had a magic 8 ball. Then I could just shake it and be like, oh, it's going up.
Yeah. Yeah, I wish I had that too, man. Yeah, I've been losing on it.
Don't buy short-term expirations. If you follow Stock Daddy or Tilia or whoever, especially if they're doing swing trades, especially if they're doing something that's 2 weeks out, give yourself triple the time that they give themselves. Because no matter what, if you buy something with time, it's going to show profit sooner or later. If you buy something with not so much time, you might as well go play roulette, in my opinion. I mean, these analysts, they know what they're doing. They know when to get in and out of stuff. He may or may not alert it at the right time. You may have gotten into it later than him. You know what I'm saying?
Yeah,
So
He said like he was swinging it to next week, but he didn't send out any exit alert or anything. But I'm guessing he got it around 70 when it was on the 70 cents or
If
72
somebody
cents, I
tells
think,
you they're swinging something, buy time. 6
by
months, a
time.
year. I mean, you got a decent amount of contracts. You could have easily bought 1 or 2 leaps, right? I mean, how much money you got in that position?
Like right now in it,
Yes.
or like how much like I put it in.
Yeah. What? How much did you buy
It
all that
was like
stuff
I think I
for?
put like 1,300 something in it.
Okay, you could have bought a leap for
Yeah, I'm
16,
like I
1800.
don't have much knowledge about the leap yet. I'm still studying about the options. I'm not there yet, so I was just like getting alerts. Pretty much that's it.
When somebody says they're swinging something, buy leaps. Trust me.
Okay. Like
Because
any
if you
stocks?
pay $1,600 for a position, a leap, you have a full year to see profits on that.
Like how to
Whereas
buy a leap? I don't know like how to do that.
it's no different than what you just did. You just buy an additional time.
Or just buy additional time.
That's all you're doing.
Like
And
a
when you
year,
buy
like a 6
time,
months ahead.
when you buy time and somebody's swinging something, they're not anticipating getting in and out of that position today. I would never ever buy an option that has 2 weeks expiration and swing that. Never. I'd be in and out of that same day.
Yeah,
So if
I should
somebody
have
tells
done
you
that.
they're swinging something, get 6 months, get a year. I guarantee you see profit on that.
Yeah, but
100%.
with time it's gonna be more too. Like the contract.
What is that?
So with like if I buy more time, the contract is gonna be more too.
Well, of
Like it's not
course.
gonna be cheap. Yeah, it's not gonna be cheap.
Well, but I guarantee you see 25% return on $1,600.
Okay.
You can't. I can't
Yeah, I
guarantee
never
you that
tried
you'll
this.
see
That's why
any
I never.
profit on those positions you're in. Matter of fact, I can guarantee you'll see losses.
Mhm.
So think about that for a second. If I can
When
guarantee
you
you
buy
profits
leaps,
with a leap,
okay, for
wouldn't you
example,
take
if I
that?
buy a leap on a $60, and for example in a month it go down to 40, so should I just average it down it, or should I just leave
No,
it as it is?
you just leave it as is.
So never average down either.
Never average down on leaps because you
Okay.
bought time.
Okay.
You don't need to average down because it'll come back. Right? It's got a full year to come back.
So if I bought something like for 1,600, and if it went down to like let's say 800, 900, you think it's gonna go back to 16 and above within 6 months or
Yes,
8 months?
yes. But let me
Okay.
rephrase. Never buy at highs ever,
Okay.
ever.
Never buy that high. Okay.
If somebody throws an alert out and it's at a high, ignore it.
Ignore it. Yeah, I guess I rushed in it because I didn't do any trade on Friday. So I would just want to get into one or two. I shouldn't have. I should have just let it go.
Yeah, that sounds like a mistake.
Yeah, I was flying that day. I was busy all day long. So I didn't do any trade that day. And when I saw the alert on Neo and it was going good, so I thought like why not? It might go like 55.
Well, never ever rush into a position. Look, the market ain't going anywhere, right? If you're too busy to trade, you shouldn't be trading. That's the bottom line. If you can't put the time into the stock market that enables you to get into a position with confidence, you shouldn't be doing it because you're going to be in the position you're in, which is a losing one. Right? If you want to go into something blindly, buy time. You can't go wrong when you buy time.
Yeah.
I know
Okay.
somebody that's in a call right now that's been a
Uh-huh.
year out. They bought a year and a half out, and they're down
Year and a half.
50%.
Wow.
They're down 50%. But I
But
guarantee you,
within a year and a half, yeah, within a year, it might go back up again. Yeah.
I guarantee
Just
you
have
it
to.
will. Guaranteed. I have no doubt in my mind because the market's a cyclical thing. It goes up and down. It's a roller coaster. It doesn't just keep going up.
Yeah,
That's why I
it goes down.
recommend never to buy at highs because it
Oh
doesn't
yeah,
just
I
keep
know. I
going up.
have a really bad experience with Neo. In the start, like I lost a lot on Neo.
I mean, I expect NEO to fall down to $50 area, to be honest with you. That's where I'm
Do you know
looking to
when
get
it's
back in.
the earning for Neo, or you already went like the
Do I
Neo's
know what?
earning? The Neo's earning. Where can I see the earnings?
It's every 3 months. So if you go back to the last earnings, it's 3 months after that. It's quarterly. And you can't really get a specific date on it, but you know, you can get it generalized within a week or so.
Yeah, I should have a hold.
I can't hear you. Something's wrong with your mic or something.
I'm sorry. So I was saying I should have hold the Neo back in September, October. Around that time, I bought it around, I'm guessing $20-$25, and I didn't hold it that time. Yeah, I should have. Like, what stocks is best for for long time, like for holding it for long time?
I don't do long term.
You don't do long term.
It's a waste of time. You gotta remember, time is money, and you're wasting it if you got your money just sitting tied up in one position, a long-term position. Why not recycle that money and compound it?
Okay. So like, how you do it? Like, you like reset your account every month or two, or you just like
What do you mean reset?
like I never take out the money from my account yet. So should I do you like take out the money every
No.
month or week? No.
I never take money out, not if I can afford to keep it.
Okay. I think pretty much that's it. I'm gonna see what New will do on Monday, and then I guess I'm just gonna come out of it.
Hey, Hostile.
Thank you, man.
You're welcome. Hey, what's up?
Hey, how's GDX looking for 2021?
I expect that to come back to life. I mean, it's at support. Now's a great
Yeah.
time to get in it. But personally, I don't GDX. I prefer miners, not an ETF, because this doesn't. It just doesn't. I don't know. I'm not too crazy about. I mean, it's got a ton of OI for January 2022. If that's what you're asking about.
Yeah, so something like AUI, Yamana Gold, I think.
No, I wouldn't mess with that either. I'd go with Newmont.
All right.
Newmont
I'll take a
Mining.
look at it.
Why not Barrick? Hostile Barrick looks good right
Barrick's
now.
okay too. Gold. Barrick is okay. Barrick and Newmont are the top gold miners. Those are the two that I would mess with. But they're all again down near support, right? So I think this is miners are the best way to go in my opinion. They pump more than an ETF does.
Mm-hmm.
As far as percentage, right? So let's take another look at GDX. So for a second here, let's see. Right now, gold or Barrick is at, let's say $23. Let's say it pumps to its high of 31. All right, so 23 divided by 31. So 26% difference in price. Okay, now let's look at the difference here on GDX. So 34.50 to, let's say 46, right? Let's just see. 30, what was it again? 34.50 by 46. That's 25. So it's actually pretty close. Let's take a look at Newmont. This one's
Hostile. How about a Barrick Leap or a Newmont Leap?
That's what I would go for. I have leaps. Look, I have Barrick. right here. I am in a 2022 call. So I'm preaching,
Yeah, when
not
I
practice.
yeah when I look at these precious metals charts, all of them look the same. Like
Oh yeah, yeah.
gold, silver, any ETF, any miner. I mean, they follow exactly the same
Yeah,
pattern, I
it's
guess.
just a matter of which one is going to have the better contract pricing, right? Which
I
one's
see.
cheaper?
Yes.
Which one has the most open interest? And then you got to determine what's the potential increase in percentage, right? I think gold, Newmont actually might not be the better one because I guarantee you where it's at right now of 60, 61.75 to 72, that is not 25%. Gold or Barrick is a great one. And GDX isn't bad. Don't get me wrong. You could also look at silver companies. One of my favorites is WPM, Wheaton Precious Metals. This one, 39. This one actually might be really good. 39 divided by 58. Shit, 33%. Wheaton is actually really nice. And if you look at the cost of the contract, it's worth more. So if I look at gold, so Wheaton right now at the money is 625. Barrick at the money is 289. GDX at the money is 500. Newmont at the money 695. So I think Newmont's the worst one. WPM is going to be the best one.
Yeah, and you want
They're not a miner either. They're a streamer. So they actually are the best of both worlds.
so they get it from rivers. Is that it?
No, no, that's not what a streamer means. But good try.
Yeah, I was guessing. You know.
Streamer is they buy directly from the miner for a very cheap discount, and then they sell it on the market for spot. So they're a middleman.
Okay.
So they don't have any footprint in mining. They just have deals with miners, and they go to them and say, "Here, I'll buy 5,000 ounces from you for a discounted rate," and then they'll go to the market and sell it. Whereas a miner needs to have the infrastructure and logistics in place to get it out of the ground, to turn around and sell it to the market. And they got to go through everything, right? So imagine being in a company where you don't need to do the mining and spend money on equipment and personnel and all that crap. You just go to them and say, "Hey, I buy the product from you," and that's it, right? It's kind of like if you live in California and you are everybody understands marijuana, right? I think everybody understands marijuana pretty well. You live in California, you have a head shop where you sell marijuana. Instead of growing all the plants and having the lighting and paying electricity for all of it and hiring all these people to do it, you just go to a grower directly and say, "Hey, let me buy this product for cheap." And then you go turn around and sell it on your shelves for, market price. That's what WPM does with silver.
Yeah, this sounds really good. I'll look at it. And also, you want in the money leads because you want the intrinsic value. Okay, at the money. All right. Because you want the intrinsic value rise, right? Is that the reason?
Well, I want to get it because when it's at the money, it's how do I say it? When it goes in the money, it becomes exponential, right? The moment it crosses over that threshold of being in the money, The delta starts to increase every time the stock moves in a direction. It's more money for that position, right?
Yep, makes sense. Yep.
Also, why is Wheaton better than Newmont again?
Because they're just a middleman.
Sorry, I'm talking about the contract, the Leap contract in
Oh,
January
oh,
22.
they're better because of the percent increase that they have the potential to do. So their percent increase is 33% of potential from where they're at to the high, whereas gold or any of the other ones. So gold and GDX, so they have a 25 and 26%. Newmont is probably like 10 or 12%, but Wheaton is at 33%. So it's the difference from where it's at to its high.
Got it.
So imagine if your contract went up, if the stock went up 33%, imagine what your contract's going to do versus something that goes up 25%.
And how did you calculate that quickly?
You just take the price that it's at and divide that into the high. And then whatever that number is, so like with Wheaton it's 67, subtract that from 100, that's your number, 33.
Okay, perfect, thanks.
Yep. Okay, who else has questions?
Hey, Hostel. I have a question about an Apple Leap.
Okay.
I just have a problem understanding how I was just looking at the contracts. And then, so for a year out, 2022 in January, there's puts that are up 30%, yet the calls themselves were only up like, are going down 3%. I can't wrap my head around how a put is up, yet a call is not.
What do you mean by it being up? I'm not understanding that.
Well, it just said today gained 34% on the, like, I think it was the 30 strike. And then there's the 145 calls for the same date that lost, 4%.
Where do you see that? Where are you seeing that information?
Sorry, Hustle. I'm on Robinhood, and I was just looking.
Yeah, that's pretty misleading, in my opinion.
Okay.
Yeah, you should get off of Robinhood. Be honest with you.
That is happening in about 1 week here.
Because there is no such thing as like that. You don't see that on a regular broker. When I'm on TD Ameritrade or Thinkorswim, there's nowhere it tells me a strike has lost or gained a percentage. That's why
Okay.
I say
Yeah,
it's misleading because what exactly, like, how are they coming up with that? Because
yeah, thank you.
every one of these strikes is losing. If you buy, every one of them is losing every day. Even if it's gaining, it's still losing because of theta.
Exactly. Okay. I was just really confused. It was extremely misleading looking at that, but thank you.
Yeah, you're welcome. Okay. Anybody else?
Hey, what? I heard someone talking earlier saying that they don't trade options; they only trade stocks. Was that you talking earlier?
That was Mario.
Um, does Mario post his alerts in the group at all or no?
Yes, Staff Share Buys. There's a channel called Staff Share Buys.
Okay, thank you.
You're welcome.
Hostile. Do you also send alerts?
Not generally. I'm even though I'm an analyst and I've taught Mario and FaZe and quite a few people. I used to give out alerts, but there's too much work for me to do here where I don't have the ability to just do alerts anymore. Every once in a while I will. But most of the
Yeah,
time, my
really.
positions, I will tell FaZe about a ticker that I'm interested in, and I'll tell him to watch it and give alerts on it. Because I have faith in his ability to determine a good entry and exit. I mean, and that doesn't go to say that I'll just follow him, right? I'll tell
Yeah.
him, hey, I got these tickers. I think it's a really good level. It's giving great premium. You should alert this, or you should find a good position to enter and alert it for this ticker. So I typically just kind of funnel my tickers to him, and because he's got a larger account than I do, so it's easier for him to alert multiple different types of tickers to get into. But he does the same trading as me. I taught him how to do what he does, so I guess you could say he's my protege, maybe. Mario 94 is my protege too. I'm gonna take credit.
Yeah, sometimes I follow Mario shares, the staff share, and it was pretty good. The last thing I followed the SDC of him. It was pretty good pay.
Yeah, I'll tell you, Mario's come such a long way. He was doing options before and losing, just all the time losing. And I spent time and showed him how to trade with shares, and he's been winning all the time now. He doesn't lose. Just like FaZe, he was losing when he came to the server. I taught him what I've been teaching everybody else, and now he's doing nothing but winning. Right? So both of those guys are perfect examples of everything that I teach, or everything that I've got on my channel, or everything that I say. Those two guys are perfect examples of how to implement it and how what I teach can be successful.
Yeah, I'm gonna make some kind of schedule from next month because I need to start watching your videos a lot now because I feel like that's helping me a lot now. But
Yeah,
I'm not getting
and pay attention
time.
to both of those guys, right? Because I'm telling you, they took everything that I've given them and they learned it very well, and they have implemented it extremely well. I could even potentially say a little bit better than I have at times, right? We all have our ups and downs, but I think both of those guys have learned everything that I've taught them extremely well, and I have confidence that they give solid alerts. Everything they've given has made money. If you look at Mario's plays, all made money. If you look at FaZe's plays, all made money. Right? And I'm not saying that the rest of our analysts aren't any good. They're just doing a lot more highly risky trades, whether it be penny stocks, whether it be buying options, whether when you buy scalping, when you swing buying, or whatever the case. Option buying is just way more risky because the probabilities are not in your favor, right? And this is what I try to teach is probability. If you have probability on your side, then the chances of you winning are much higher, right? And when you're doing shares, probabilities are on your side because you choose when to lose, right? And as
Yeah.
long as you're getting in at the right time or relatively the right time, meaning around support, doesn't even have to be perfect. The probability is on your side for that stock to go back up and turn green. Same thing with FaZe. He sells premium. So Theta is on our side. Every time a day passes,
A few of his, but he's mostly like puts, not the calls,
he's selling puts.
Yeah.
So that means he expects the price to go up.
Oh, he's selling puts. He's not like buying puts.
Correct.
Oh, I never pay attention to that much because whenever I see put, like, I'm not really much into puts.
Yeah, it doesn't mean that he's bearish. He's bullish.
Oh, he's bullish. Okay, so I didn't know that. So
you got to understand what
something
it
good to
means
know, yeah.
to sell premium versus buying it. You've been buying premium. You need to
Yeah,
understand what selling premium is.
No, I tried to sell a premium on my solo, and I felt like I got stuck into it because when I sold it March 1, and after a week, it just started going up the solo. So like pretty much I'm down on it. So that's why
You sold a call?
yeah. So like I had a shares of solo, like I had a 300 shares of solo. So I sold 3 calls on it, like because I was going really. I bought it when I was I averaged down to $8 on 300 shares, and it was always going between $6 to $7 only. It was never going up above 7. So I thought let's just sell 3 calls so I can make some premium.
Well, whenever
So
you're in a position like that and it starts to go against you, you can always roll.
like how?
You roll.
Like you just buy it out?
What broker are you on?
Webull.
So I'm not sure how to. I'll show you how to do it on TD Ameritrade or Thinkorswim, but I don't know how to do it on Webull. But I'm pretty sure you can. So if I'm in a position, and so are you looking at my screen right now?
Yeah, I'm
All right.
looking at it.
So I would create a closing order. I'm sorry.
Okay.
Create a rolling order. All right.
Yeah, I don't think that Webull has that option, but I can look at it on my laptop. 1 second. I'm
VCAV,
on
you
the.
in here? I see you, VCAV. Are you here? Maybe not. Should be able to.
Hostile.
I don't see why
Hostile.
not.
You're basically just closing that contract and selling premium out further out in the next month, right? That's all you're really doing.
Yeah. I mean, you're closing it
Right.
for a certain price. Let's say
So
$500, and
yeah,
then you sell it for 600. So as long as
yeah,
you're taking in a credit, that's the goal of a roll, and you can
you're just pushing
indefinitely
it out.
roll it.
Yeah, so just tell them close the contract and open up a new one. There you go. There's your roll.
Okay,
I
but
would
I'm
rather
losing
he
if
see
I
it.
close contract. I'll be losing like at least a couple of $100 on it because it's right now.
No,
So when I
because
bought it,
you're collecting premium on the following month because you're selling it. You're going to sell another put or a call option in the following month for more
on the
credit.
following month. Okay.
This is why I wanted him to see it because it's when I tell somebody they're closing a position and buying it back for a loss and then selling a new one in the future for profit, it's just better for somebody to actually see it visually. Essentially, that's what you're doing. You're buying it back for a loss, and then you're
Yeah.
selling the next month out for a premium, and it's more money than what you took on that loss. So
Oh, okay.
you buy it back for 500, you sell the next month for 6. So you take in $100 credit basically. So
Yeah,
there's
because
no
when I
loss.
bought it, when I like sold it, it was 120 per per contract, and right now it went till like 250, and I was like I'm not closing at 250, so I waited out, and right now I think it's on, if I'm not wrong, let me see, it's on 164 right now. So I'm like losing $44 per contract. So should I just buy it out, like
So
when it hits a little bit low, little bit more low, and then sell it more higher premium?
question you need to ask is, can you roll firstly?
Like, can I buy it out?
Does it give you the option that says roll?
Okay, let me try it one more. Hold on 1 second. So
because when you roll, you're getting specific numbers, but if you close it out now and then turn around and open a new position, the pricing changes, right?
Okay.
So you're
like
realizing losses basically. If you don't roll it, you're realizing losses. But if you roll it, you're just adding to the premium.
Okay, let me see if I'm getting the option for roll. Yeah, there is no option for roll here. Or maybe I'm doing wrong, but I don't really see an option for roll here. All I can see is long calls, short calls, and there is like covered calls, covered puts, long straddle.
On the
Long
position,
straddle.
on the position that you're in,
Yeah, on the position I'm
click
in.
on the position as if you're about to close it and tell me if it gives you the option to roll.
Okay, so if I'm clicking up the position, it's asking me buy or sell, and I have to buy it out, right? So So I click
So
on
at
the
least,
buy.
hey, at least you gained on the stock price, right? So you're good to go.
Sorry.
You have 300 shares, so you gained on the price of the stock.
Not really, because when I bought it, it was like a month ago, and I averaged down to $8, and it went a little bit above 8, but I was losing a lot on my calls.
So right now you're losing $44 per contract, right?
Right now, yeah. So altogether,
Okay, so you buy the 3 contracts, you pay the $44, and then next month you sell another premium, and hopefully you make up for the loss of the $120 something you just lost right now.
yeah, I think that's pretty easy.
Yeah,
You
that's a
see,
roll.
what you're not understanding is he's realizing the losses. If you roll, you don't realize anything. You just take more credit. That's the difference between the two.
Yeah, but it's not giving me an option to roll on Webull. Maybe Webull doesn't have that option.
Let me see.
That roll option should be in the strategies, right?
Hold on. I don't know Webull, so I gotta look this up, unfortunately. It doesn't look like it. It looks like you have to realize the loss, and then
Yeah.
that's too bad.
Yeah, that's what happens. That's why, like, I not switch it from from Robinhood to Webull, because Robinhood was just ripping me off completely, like, with especially with options.
So this is why this is a good example as to why Webull is still inferior to Thinkorswim, because it just doesn't give you as many choices as Thinkorswim does.
Yeah, I think that Thinkorswim has like more strategies than the Webull.
Well, you can definitely do more strategies on Thinkorswim too. You can do spreads on Thinkorswim. You can't do spreads on Webull. So there's that too, right? I mean, multi-leg strategies you can't do on Webull. Webull is for new traders that A are just new, period, or B transitioning from Robinhood. But when you start
Yeah,
getting
that's
the
what I.
complex trading, then it becomes inferior to Thinkorswim.
Yeah, I think I have to go get switch it to Thinkorswim or TD Ameritrade.
With Thinkorswim, I mean, it doesn't matter in Webull, I guess, but with Thinkorswim, I don't pay contract fees when I roll. At least I
And you
think I
don't
do.
realize the losses either if you're rolling,
Correct.
right?
Correct.
Okay. Yeah, that's what I wanted to know if I'm gonna realize the loss or not, because
You
if I'm
will.
realizing, that means I'm paying that $44 per call for like like how much for 3 calls? Like I think 130, 132 is gonna be. That's
Yeah, I mean,
going out of from my account.
it's the same thing, right? Rolling and doing what you have to do in Webull. It's the same thing, except the difference is you're realizing it versus it being unrealized. And when you unrealize it, it just adds to the premium. Whereas when you realize
Yeah.
it, it actually shows up on your statement as a loss.
Okay. But it's not. They are not actually taking out money from my account.
Well,
I
they
still have
are.
that money.
They are.
They
And
are.
then whenever
They
you
are.
go to sell another call, you take in more premium. So essentially what you're trying to do is take in more premium than you lost on the exit of that position.
Oh, okay.
So if you don't take in more premium, then you're just losing.
Okay.
So
But
you need
if
to
I
make
if I
sure.
want to take the more premiums, but then I'm not really losing money from my account, but they're just gonna take it out from the premium, right?
No, you're still losing. That's what I'm saying. You're realizing a loss.
Okay.
It's the bottom line. It's a realized loss because you entered and exited that position. With a roll, you're not realizing it because you're kind of flipping it and going further out in time.
Okay.
But it's essentially the same thing. It's just the difference is you're realizing one and the other one's unrealized.
Because like I was gonna close it out and just sell out all the shares I was holding it, uh, because it went like to almost $9, and I was like to almost $100 up, like each contract.
I mean, you could do that, or you could turn around and. When's your expiration on that call?
I think it was March. Let me check. Hold on.
Oh man, you got so much time.
Yeah, it was 19 March. Yeah, 19th of
I
March.
wouldn't do anything with that.
Oh, should I just leave it
what's the
out?
stock? What's the stock?
Solo, SOLO. The only thing is like Solo only pumps up every few months. It's not like right now it's pumping up, and after like maybe a week or two, it's just gonna go down, and it's gonna stay like that for at least for 2-3 months again.
Don't sell that. Don't get out of
So
that.
don't.
Remember,
Okay.
when you sell something, theta is on your side, right?
Okay.
What's your strike? And
My
expiration was
strike
March 19th, right?
dollar is $9.
$9 strike.
So if it goes up above $9, then I have to sell those shares,
No,
right?
you don't. Not until expiration. You've got till
Or not till
expiration.
So what? Let's just say
That position is losing $2 in your favor. So you're basically gaining $2 every single day right now.
Yeah.
That theta decays. And if you
So
sell right now, you're taking a loss when you don't need to. You have so much time. That position has 54 days till expiration.
yeah.
The chances of that going in your favor are high.
Okay.
I would
So let's
wait
just
till
say
7 to 10 days left on expiration before you start considering rolling or doing something. Because by then, so if you're $44 down right now and your strike was $9, you're still out of the money. You realize that. You're out
yeah.
of the money. It's still
Yes, I
in
am.
your favor. And if it goes down, now you're
What
looking at more profit.
what if the share goes to $10 and it's like before the expiration date? Can I still go ahead and sell the contracts I am having? And am I gonna get anything above the $9?
How much did you
Or
get paid for those positions?
120 per contract?
So
So it's like
your break even is $10.20 at expiration
oh, okay.
on those contracts. So if it's at $10 by expiration 2 days before, then that position you can probably sell those or buy those calls back for probably definitely less than what you paid,
Okay.
right? It might cost you 15 or 20 bucks by then. Like, let's see, 5 days left on January.
Yeah. So today's like 24th.
Well, it's kind of hard to say, but
I think what I've been doing solo for a long time. This is what it does every few months. Like it's gonna go up maybe another week or two, and after that it's just gonna go down to again $5 to $6.
That's when you sell it.
That's when I sell it, right?
Or when you buy it back. I mean, that's when you get out.
Yeah. That's when I
But
get it.
here's the thing: is you want to continue to own these shares?
Yeah, I want to because this share is
Okay.
like it pays me.
Perfect.
Yeah.
Perfect.
I'm not really trying to sell it, but I wanted to. What I was thinking, I just sell it the shares when it hits $9 or $10 again, and then buy it back again when it hits when it gets to $5 to $6. Because right now my average is $8.
So in 2 weeks, if that falls back down to $5 or 4.5, that contract will probably be worth around $60. So you will probably be in profit by $60 if you got paid 120 for it.
Okay.
Maybe less. Well, let's see. 2 times 14, that's 28. 28 minus 71, 2050. So it'd be around $50. I'm kind of looking at it based off of the strikes from where it's at, going further down here to look at the price of this current contract, and then subtracting the theta of 14 days. That's 28 cents or $28 because it's $2 of theta. Subtract 28 from 71 puts me right around 48, 49. So it'll be worth probably $49 in 2 weeks if it goes to $4.50.
Okay. Like
And
this is
you
the other
will
thing I wanted
make
to know.
well, you will
Like how
make $80 per contract at that point.
so I can just buy it out and just wait till the or should I just buy a higher
No.
sorry, sell the
You wait
higher
till
one
it
again?
pumps. You
Oh,
wait till
okay.
it pumps, and then you sell calls against it.
Okay. So I can get more premium when it's
Well, not only that, you're selling a call at a strike that's much higher than your break even,
okay.
right? Because if it pumps to $10, so let's say it falls to 4.5, you sell your contracts or you exit your contracts, your positions, you make profit, then it pumps to $10. Well, now you can probably make right around $150 to $200 per contract when you sell it at a $10 strike. Your break even is at 800. If it calls away your shares, you made $200 off those shares plus the premium that you got paid. So basically doubling the value of those
Doubling
shares.
the mm-hmm.
Always do it off of resistance and support. Never, ever, ever do it in the middle because you don't get as much premium, and the chances of it going in either direction, not in your favor or in your favor, is 50-50. You put probabilities into your favor.
You know the funny thing? I didn't even know about this selling contracts. I saw Tilio did it against of some of his shares he bought it. So I didn't know what he did, and I Google it. So then I knew said that we can sell the contracts against the shares we was having.
It's called covered calls.
Covered calls. Yeah. Before I didn't know how to do that. I just saw Tilio doing it. Like alerting one day, and I just follow him doing the same thing.
I mean, it's a really great strategy, especially if you want to continue to own the shares. It's a great strategy because you can lower the break even on those shares.
Yeah, and one more thing I want to know, like, how do you calculate the prices of the options? Like, let's just say if I want to buy some more contracts, like for Solo or for Apple or anyone, how can I calculate the price?
I made a video on the Greeks. I think you should check that out.
Did you post it here or it's on the YouTube?
It's on Professor Hostel channel. You can find it there. But it
Yeah.
is on YouTube, but you can find it on that channel. And
Yeah, I
that'll
think I'm
explain to you
following your
how the contract pricing works.
yeah, I'm following your channel on YouTube. I think I'm just gonna look over there. What's called Greeks?
It's called Option Greeks, maybe. Hold on. Yeah, I think it's just called Greeks.
Professor HD, that's your channel, right?
Professor Hostel, yes. Option Greeks.
Options.
That's the one you need to watch. That explains how the pricing works of the contracts. What affects the price as far as Greeks? You got to remember, bid and ask spread affect the price. Implied volatility affects the price. And obviously the stock price affects the contract price. But the Greeks are how the price is calculated based off of the movement of the price.
Yeah, I think you posted 3 weeks ago this one, right? That's the one?
Something like that. There's only one video that I have that's called Option Greeks.
Yeah, I found it. I'm gonna go ahead and watch it. This one. Because I really need to know, if I'm gonna lose, if the price goes down, I need to know, how much I can be able to. If I'm going 20-30%, which I shouldn't of my portfolio, I'm gonna try to do more 5 to 10%. I feel like I'm buying more contracts than I shouldn't.
Yeah, you should definitely cut back on the
Yeah, I need
position
to work
sizing.
on that. Yeah, I need to work on that. That's why, like, if I'm not paying much attention, I need to know if the prices are going down, how much able to I can afford it. Like,
Right.
Okay. Thank you so much, Hostile.
You're
Thank you
welcome.
for your help.
No problem.
Hey, Hostile, can you drop the YouTube link in one of the chats? I was trying to find it, but I couldn't find it anywhere.
It's in announcements channel.
Got it. Okay, thank
And
you.
if you could let me know if it's still working, because it's showing as an error on my side, so I might need to restart it.
Okay. All right, let me check now.
Okay, anybody else have any questions?
Hey, Hostile, what do you think about CCIV?
Ooh, it's pumping hard. I don't like this either. I think FaZe likes this one. He likes to trade this one. It's at an all-time high. I wouldn't touch that, not unless you're bearish. But even then, I'm sketch about being bearish, to be honest. It doesn't.
Hey, by the way, I found the YouTube video and it works. Thank you.
Okay, awesome. You're welcome.
Hey, Hostile. So
I just I'm sorry. I just post your video in the trade flow if anybody need it.
Okay.
Thank you.
So Hostile, FaZe did a VC earlier in the week, and he said he trades around like a 25-30K port. So like, most OOT traders don't have that type of portfolio. So selling premium is kind of difficult, right? So then if we do credit spreads, it just decreases the amount of money that gets tied up. But then can you still roll that?
You
if you
can,
have
but
to?
sometimes it requires additional collateral. So it
Right.
increases collateral, doesn't give you as much premium. So it basically just, at some point, if you have to roll that multiple times, at some point, you don't take
It's not
in
worth it.
any more credit and your collateral
Right.
increases. So it's just
So
more and more money that you're throwing at it that
right.
you just
So
don't,
for
it's
some,
not beneficial.
so let's just say I want to just focus on selling premium and follow FaZe more often because let's say it's just theta's on our side. What's a recommended amount of cash we should have in our account to keep up with those types of trades, like 10,
Well,
15K?
when you look at his trades, whatever he's trading, multiply that number by 100. That's how much you need per position, right? Now, we realize that most people don't have portfolio sizes that big, but there are trades that he gets into that you can also get into, right? So, I mean, you can do it with 5K. It's going to be, I mean, like I got into QS, which was $50 a share. That's $5,000. You need $5,000. But that position also paid me a premium of $500. So there's positions that you can get into. Actually, I'm sorry, it was a 45 put, I think, or 46. So it's $4,600, I guess. But there are positions that you can get into that are small enough that don't require large amounts of money. However, if you want to participate in most of his trades, yeah, you're going to need 20,000, 30,000, because you got to remember each position, if he gets a $20 stock, $30, $40, $50 stock, that's 2,000, 3,000, 4,000, 5,000. That's 20 grand right there. Like 4 or 5 positions is 20 grand. You know, he likes to play TNA a lot, which is $70 shares, $70 a share. That's $7,000. I like to play Nug T. That's $70 a share, 60. That's $7,000 a share or a position. You know, he likes to do like CRSR that I wanted to do. It was at $35. That's $3,500. You know, he likes to do BYND and Apple, right? That's 13,000 and 14,000. You know, Baba, that's 25,000. Fastly is 10,000. So at some point, though, if you're getting into these positions, some of them, and you're making money, you're going to get there. You're going to get to the position where you can play his plays, if that makes sense. And if you don't have the money in your account, maybe consider putting more in, because these plays win. Look at the channel. They're all wins. He didn't take any losses. Everything is, I'm up, take profits. I'm up, take profits.
Or do shares till you have it.
Or do shares till you have it. That's right.
What's the name of the channel?
Selling premium only. So we got a alert channel. The alert channel, option alerts, is selling premium only. And the chat channel in the trade section is, shit, where'd it go? Did that get moved? Interesting. That channel looks gone. I'm gonna have to fix that. But there used to be a selling premium chat.
I see it. I see it.
So there is an alert channel, but I don't know what happened to the chat channel. So
I see the chat too.
I see the chat too.
My bad. I had it minimized. Yeah, it's called selling premium chat. All right. So I didn't realize I had the section minimized.
No, that makes sense. I guess there's more consistent wins with phases trades, but I guess it's just not as sexy as getting a 3-4 bagger on a trade here and there.
Absolutely, yeah.
Buying calls, right? But this is just more consistent, but just small premiums that you're gonna get every week.
If you look at it though, go ahead. I'll let you finish.
So that's why, like, if someone wants to consistently trade premium, having 20, 30K in your account to keep, not to keep up, to consistently get $300 a week, you need to make at least 2-3 trades, I'd say, right?
Yeah, generally. But I mean, a lot of my positions are monthly.
If you're selling for $500 premium, you're probably gonna collect maybe 150 out of that, right?
No, I go for 50% off of anything I get into, unless it's the first 5 days. So in the first 5 days, if I see 30 or 40%, I take it. After the first 5 days, if I see 50%, I take it. If I have to be in that position for 50% of the time of expiration, I want 60%. If it takes me all the way until the last 10 to 15% of the remaining expiration, I want 80 to 85%. So it depends how long you're in the position. If it's very short term and you see 25 to 50%, you want to take that because you can exit it and guarantee it's probably going to come back down. You can get right back in it and do the same exact thing. So when something pumps in your favor, you get out. But when something languishes and just sits there and goes sideways, that's when you wait. That's when you let theta do its work. So you got two ways to make money. If it rips in the direction you need it to, you take your profits. If it doesn't, you let theta do its work. Because you got to remember, when you get into a position at say $50 strike and it pays you $500, your break even's 45. So even if it goes against you, it's a $47.50 or $48 and it's showing a negative loss, that's fine. Guess what? I still have theta decaying. And if I'm at support, if support was 48 and the price is at 47.50, I'm in a good position because it's still in my favor. The probability is still on my side for that position to go positive.
But then how do you and FaZe find that fine balance between high IV stocks and trying to find something that trades sideways? Those don't necessarily go hand in hand, right?
No. So when something goes sideways, that's an unintended consequence, right? What we're looking for is something hit support, and then bounce. Right?
Like you're looking at high IV at resistance.
That's support.
At support.
Because
Got
you
it.
got to remember.
Well, I guess depends on what side of the trade you're taking. Yeah, it makes sense.
Right, and the thing is when selling pressure is high, meaning the stock price is at a high and it's falling, right? And selling, the implied volatility is increasing because there's more liquidity happening, right? And then it comes back down, it hits a support level. It's still going to have high IV. It may not be quite as high when it was starting to sell off, but it's still going to be relatively high, right? So let's say 50 to 60%. That's about the level that you want. You don't want to go less than that. An IV rank, really, sometimes that doesn't work though. IV rank is kind of iffy sometimes. So, there's let's see, CRSR, right? I mean, that one's showing 65% IV rank, but 117 IV. That's a great premium, right? BYND is showing a 20% IV rank, but it's still showing a 66 IV, right? That means the premium's still pretty relatively high. I mean, if I look at February for BYND, it's showing $800 in premium at the money, right? I mean, if I do the math on that, 865 divided by 14,100, that's 6% gain, or I'm sorry, 6% premium based off of the leveraged amount of money that you have. So if I take a 50% win on this, I'm making 3% off of my leveraged money, right? So, and the goal is 2.5 monthly. So, if you've got 50K and you trade 50,000 worth in a month, you don't have to trade 50,000 at a time. But if you trade 5,000 today, 10 tomorrow, next week you do 20,000, the week after that you do 30,000, you're already over the $50,000 mark. If you made 2.5% on every one of those trades, you have made your 2.5% goal.
Mm-hmm.
So
No,
even
like
if something goes against you, it's still totally fine because you have till expiration. And by expiration, if I sold a 50 strike, it paid me $500 premium and it's at $49, I'm still making $400. I can still get out of that position with profit, even though it's against me. That's the beauty here. Versus when you buy options, if you have to wait till expiration, guess what? That position's worth nothing. You lose. So yeah, it's not as sexy, like you said. I know FaZe likes to say that a lot too. Not sexy at all. But let me tell you something. When I got $500,000 and I got $250,000 in the market, she looking sexy now. What's 2.5% a month on 250,000? Let's do that math. 250,000 times 2.5%. That's $6,250. That's sexy. That's more than I make at work. And that's easy. 2.5% is easy, in my opinion. A lot of these positions that we get into, they're 12% leveraged. So if you take 50%, it's 6%. And 2.5% is minimum. Must get 2.5%. If I'm not getting 2.5%, not interested. I'll keep holding it. If I got to roll it, if it's against me enough and I have to roll it out and get premium, that's fine. Because when I roll, I get premium and I go towards the stock price. So if it's against me, so like again, 50 strike pays me $500. If it's at $46 by expiration, I'll roll down to 49. I'll go to the most recent next expiration that pays credit, that pays me money to roll that position. And I will roll my strike to 49 from 50. So get closer to that stock price. And remember, if I'm doing this off of support, I'm just getting so much closer. I'm raising the probability. It's a win-win situation, right? And if it's so far against me, let's say it's at $40, I might have to go 3 months out, right? But if it's at 40 and I sold a 50 strike based off of support, the chances of that coming back in 3 months are very, very high. If it's high, a 3-month high is at 70. Let's see. QuantumScape was the one that I did. So let's see what the high is on that. 138. I sold a 46 strike on this. But let's just assume, let's go back to the 50. Let's say I did a 50 on this. And I got to roll this. So I got a February 19th strike, $500. If by February 19th this position is at $44, I'm at break even. Or $45, I'm at break even. I can roll down $1 for a month out, and I guarantee you I get credit for that. Guaranteed. And the chances and probabilities of this going back up just above, it just needs to expire above 49 at that point. And look at the probabilities. Look how much this stock pumped before to 138 bucks. All it needs to do is go above 49. The chances of it doing it are very high, in my opinion. That's why I love cash secured puts, because it's a win-win. Completely win-win. If this stock crashes down to, what's the support level right here? 31. I might have to sell a year out from now if I'm at 49. But I've got a year for this position to come back. Now, the only downside is your money's tied up. It's the only downside. But you don't lose. That's why we say not to go too heavy into a position. Because if you do, and it goes completely against you, if you're too heavy, you can't get into other trades. You can't make any more money. So here lies the reason why we recommend not getting in too heavy. Now with CSPs, you're going to be doing 10%, 15% of your portfolio per position, right? Potentially 20%. But it's a lot safer because you don't lose unless you decide to lose, unless you don't want to roll out and you want to take shares and you want to start selling covered calls. But again, selling covered calls on something is not the greatest if it crashes down to 31 from 49. Because you're not going to get any kind of premium. Like when you own shares at a certain stock price, you need to be able to at least sell covered calls at your break even on the shares. Or at least at the strike price that you got assigned. So if you got assigned at 49, even though my break even is 44, I still need to be able to sell covered calls at 49 strike so that I can keep that initial premium and gain more. So really what you're doing here is selling time. If you have to roll something, you're selling time. I mean, you're honestly selling time with CSPs too. Time for it to go in your direction.
Yeah, I'm sold. I'm gonna look to the next trade that FaZe does, as long as it's within reason. Thanks.
You're welcome. And if you can buy options, you can sell covered calls and cash puts. As long as you got the money. Because buying options is actually a level up. On my broker that I do CSPs on is Schwab. It's level 0 options to do CSPs and covered calls. It's level 1 options to buy share or buy options. So it's actually a lower level.
Hey,
Yeah,
Hostile.
What's up?
Quick question, if that's all right. You're done.
Sure.
It's not about the call credits spreads or anything. It's about my Roth IRA that I started for my dad. I just wanted to verify. I've only put a couple hundred so far, and I bought like penny stocks, pretty much some of Joe's alerts. Is that a problem or is that okay?
Personally, I think penny stocks are highly risky because they're highly manipulated. Any one hedge fund can go in there and manipulate the shit out of a penny stock. You got to remember, if it's really cheap, how many shares can you buy? right? And if somebody's
Yeah.
going in there with $1 million, when that's chump change to them, they can manipulate that stock into their favor. You know,
Right.
regardless if
True.
he's able to give you a trade that will win, right? And it looks like he can. Looks like I've seen his trades. They look like they're profitable, but it's penny stocks, right? It's just as risky as buying options. I wouldn't touch penny stocks in a Roth. I wouldn't buy options in a Roth. You could buy leaps in a Roth, but I wouldn't buy any short-term stuff. I wouldn't touch penny stocks. That's
Okay.
just
So
my
what would you
opinion.
recommend if I'm starting like with low cash for that? Just save it up and build it up, or just buy like
Shares.
more expensive shares?
Shares.
I mean, just buy a couple, even though I've only got like a couple $100.
With
Doesn't matter how
200
many I
bucks,
buy.
you could. I would put $200 on one thing.
Just one. Okay.
Yep. Throw it all at it.
Got you.
And do that until you got 5 to 10 grand. And then you can split it up into 4 or something like that.
Oh, okay. Even that much amount, keep it on one item.
Well, when you got 10 grand, I would say, 1,000 to 2,000. Right? But
Okay.
if you've only got 200, 500, 1,000, I'd say put it all into one stock.
Okay.
Because you're just not going to see any
More
kind of
sense.
real gains. It's going to take you way too long. So you're going to have to go all in on a stock. So make sure that whatever you choose has the potential of going up. Make sure whatever you choose isn't at a high and it's actually at support. Because you want to
Got it.
recycle that money. You want to be in and out of that position in a week or two. And you want to turn that 200 into 400. You're going to turn that 200 into 250. And then the next time you do
Yeah.
250, now it's 325. And the next time 325 is 450. And the next time 450 is 700. You might get one that goes up 50%. So at 700, now you're looking at 13, 12, 11, 50. Right? I mean, the very first time I started swinging shares, I had 700 bucks. And my very first trade, I made 1,200 total. So I got in at 700, got out at 12. First
Wow.
trade. So, and
Very
then the
strong.
next one was 1,200 to 15. The next one was 15 to 2,000. Right? 15 to 2,000 is only 25%. And then from 2,000, I made like 250 and then 300 and then 400 and 200. So it's once you get to a certain level, it's much easier to take profits sooner, recycle your money and get into something else and continue to do that. Rinse and repeat. Right? So once you get to 2,000, 3,000, 4,000, it's a lot easier to get to 10 grand versus starting at 200. Right? In my opinion,
Yeah.
I would start with 1,000. It's much easier
Yeah.
to get money.
I mean, I'll get there. I'm just like at the time being, it's a couple hundred a week is all we can really do. So I'm sort of just putting in as I can.
I got
Thank
you.
you though. Appreciate it.
You're welcome.
Appreciate it.
Hey, Hostile, I know someone brought up CCIV earlier and you were bearish on it. Are you familiar with like their merger with Lucid, and what are your thoughts on it?
I am familiar with it, and until it happens, it's just BS talk. If it does happen, I would expect the stock to fly. That's why it pumped before, or that's why it's pumping. But until they actually say we are merging, this is the date. It's just chat, right? It could just be fake news. It could just be something to pump the stock. What if it doesn't happen? That's the question. What if it doesn't happen? And the stock right now is at what? Let's see, 23.50. If it does not happen, I would expect that to fall down to $12.
Yeah, no, you're right. It's risky. Thank you.
You're welcome. I personally like to stay away from risky stuff. This is one of them. Even though I think the potential for them to merge is high, I think that if they do, their stock's going to go to 40 or 50, something like that. But there's just an unknown there. It's speculation, right? I don't like speculation because I might as well go to Vegas and bring $20,000 with me and play black or red. I mean, what's the difference? Because I'm speculating it's going to be black or red. So, I like to use stuff that I can look at the chart and say, yeah, this is a good position to get into, good company or decent company, or at least it's one of those on fire companies that, has been, very popular as of recently. The popularity is not going to die off in the next month when I sell CSPs on it, or if I were to buy shares and want to be in and out of it in 2 to 3 weeks. Fundamentals mean nothing to me. It's all about charting. So unless you go long term, fundamentals shouldn't really mean much. And that's why I avoid speculation, because there is high reward with high risk, but there is major loss too if you're not careful. Okay.
Yeah, I agree.
Okay, anybody else have any questions? And you got to remember, like Mario was saying before, I don't know if you heard it, but you got to treat this like a business, like it's going to pay you weekly or monthly, not like it's a hobby, because a hobby you kind of just do whenever you're in the mood. As a business, it's a consistent thing, and you want to make consistent returns. And if we trade based off of charting and analysis, chart analysis, technical analysis, we treat it as a business. If we trade based off of earnings reports or news or potential mergers or whatever the case, like that, speculation basically, can you honestly say that it's a business at that point? So I really, really like to stress and push consistency in profit taking and returns in general. Right? And this is why I don't like buying options, because there is no consistency unless you're doing leaps. Because in some point in the future, if you're buying leaps off of support, it's going to go up. And if you get at the money off of support, it will go past that point. 100%. Consistency is really the most important thing here, because I know every single person in this channel or in this voice chat on this server, no one wants to work a job. No one. I sure don't. I know FaZe doesn't. I know everybody here doesn't. So how do we turn our stock trading into a consistent type of return so that we can throw the peace sign to our jobs? I know how to do it. I'm working on it. I've got a goal to quit my job in the next 5 to 10 years. At what point does my job, the money that I make from my job, become peanuts compared to what I'm making in the stock market? That's when it's time to quit. But until then, the money that I make is going to go into the market so that I can get to that point. I know there's people in here that work first shift, second shift, third shift. I work second shift. I know there's people that work first. I know there's people that work 10 hours a day, 5 days a week. And my wife, when she worked, she was doing 6 days, 10 hours a day. That's ridiculous. These jobs, that keep getting worse. Pay goes down, hours go up. Who wants to live a life doing that? It's time that we change the decisions that we make, change the positions we're in, change the lifestyles that we have. And this doesn't happen overnight, unfortunately, unless you win the lottery, which in case if I won $500 million, I can't imagine how much money I'd be making in the stock market. I mean, I could put 200 million in. I guarantee you I'd have 100 million. I'd have 300 or 400 million next year. It's literally that simple. I mean, I made 105% this year on my portfolio in 8 months. Totally doable. And my goals are aggressive. I'm not going to lie. If I make 100% return from now until the next 4 or 5 years, I have $1 million. If I'm making $1 million, or if I have $1 million and I make just 30% a year, that's 300 grand. I could take $100,000 or $200,000 out, pay a penalty, pay taxes. I'm still left with $100,000. I could quit my job. I wouldn't. I'm more conservative than that, conservative thinking. And I don't mean politically conservative, I mean financially conservative. Now, I'll take $60,000 that I've contributed to my account and I'll throw it in my brokerage. And that $1 million is going to turn into $5 million in the next 5 years, or more actually. I mean, when I get to $1 million in 5 years, so if I'm lucky enough to make 100% return when I get to $1 million in 5 years, so that's 2 million the second year, 4 million. I'm sorry, in a year from the time I make $1 million, that's 2 million. The next year, 4 million. The next year, 8 million. The next year, 16. And the year after that, think about it. What's that? 26 plus 6, $32 million. So when you get to $1 million, 5 years, you could have $32 million. And I truly believe that it's realistic because I did 100% in 8 months. 8 months. Very, very realistic. And I think everybody here can agree that if you had $30 million and you're making 50% returns a year, how much money is that? Monthly. 4 million. 4.25. If I gotta pay taxes and penalties on that, it's 50% of the money. I'm still walking away with $2 million a year that I can just sit at home and chill hardcore. And the beauty about cash secured puts is, let's say that I got $1 million. Let's say I got $5 million and I put $2 million, $3 million in the market. Well, let's just say $2 million. And I got monthly expirations. So let's say it's or January 19th, and I go to sell February 19th contracts, and I got $2 million worth in there. I'm going to go to Fiji, and I'm going to be chilling for 2 to 3 weeks, because when I get back, I'm going to have made more money than it cost me to go first class or private jet, rather, and have the best hut in the water and eat like a king the whole time and have people serving me. Not that I want to be a king like that, but just for retrospect. Think about that. $2 million. Let's do some math. I love doing math. I love doing math when I'm making money. $2 million. Let's say I make 5%. It's $100,000 in 1 month. Private jet costs 30 grand to fly from here to Fiji. I've checked. 30 grand. Round trip. I can go there. Now, it's not going to be the whole plane to myself. Probably, another 8 to 10 passengers. I think it's about 80,000 to have the whole plane to yourself. But let's just assume for a second that I'm sharing a private jet with a handful of passengers. I'm going to Fiji, and I'm staying for 2 weeks. Well, Fiji costs about $12,000 a week. All right, so 2 weeks, that's 24,000. 30,000 plus 24,000. Now we're at 54,000. I could stay for another 2 weeks if I really wanted to. And I still have money left over when I get back and cash out my positions. Or matter of fact, I could be there on my phone, trading on my phone or the laptop, whatever. I'll probably bring a laptop. It's a little bit easier. Be in Fiji at the table, looking through the floor at the sharks swimming underneath me while I'm trading, making money. Imagine, sky's the limit. If you can imagine it, you can dream it, you can do it. Right? Success is as far as you choose to be successful. No one is keeping any of us from being that successful. No one is keeping us from making $50 million. It's totally realistic. Even in 10 years, even if you need 10 years, and you trade the way that FaZe and I trade, I guarantee you, you'll have millions. You just got to be willing to put as much money as you can to throw at it. Now remember this, my goal, as I was saying earlier, I get $1 million in my account, times 2, like I say, because I trade both my wife and my account. So times 2, so $2 million in both of our accounts. And let's say that happens in 5 years. That's $30,000 a piece that I've contributed to both accounts. So $60,000, I'll take that and put it in my brokerage account. By then, hopefully my brokerage account will be at least 40,000, so I'm starting with 100,000. I won't be contributing anymore to my Roth accounts because I got $1 million a piece. So it's really easy for me. I mean, at that point, $6,000 is just a little pinch of sand in a bucket or on the beach. Maybe not quite the beach, but in a 5-gallon bucket, it's a pinch of sand, right? Full bucket of sand, $6,000 is a pinch of sand when it comes to $1 million. But that $6,000 into my account that has 100,000 now, that still goes a long ways. That still matters. That's still 6%. Right? When it becomes 0.5%, it's not worth throwing $6,000 anymore. But once I stop contributing to my Roth and I take that money out, put it in a brokerage, and I start contributing to that brokerage, $12,000 now instead of $6,000 to each account. Now I can put $12,000 into one. So now I'm at $112,000 for the year that I can start trading with. What if I make 100% on that? Now I'm at 224,000. And then again, what if I make 100% on that? 450,000 roughly. That's the kind of thing you can live off of until you retire. And so if you're modest and you're just building a brokerage account while your Roths have $1 million plus, you never touch them. You let that continue to build for 10, 20 years while your brokerage account is now your job, is now covering the money that your job used to cover. Now it's giving you $5,000 to $10,000 a month off the brokerage account. And you do that for 10 years, that brokerage account will be worth a few $1 million. And by then, how much are those Roth accounts going to be worth? I mean, it's just like when you really sit down and think about it, and look at my spreadsheet that I made, how much money can we actually make? More than any job is ever going to give you. More than anything in this world is going to give you. And at that point, it's like, well, shoot, if I got $2 or $3 million in a brokerage account and I'm making 50% returns, so I'm making at least $1 million a year, I can turn around and take that money and buy real estate. So now, again, I can, with $1 million, I can get 50 properties if I'm putting 20% down. So let's just assume for a second that each property is worth $250,000. Put 50% or 20% down, that's $50,000. That's how many properties is that out of $1 million? Let's see. 50 properties. Yep, I had the number right. So 50 properties, if all 50 of those properties are making me $500 a month, that's $25,000 just in real estate. Just in real estate. And with real estate, there's depreciation value, right? So $250,000 divided by 27.5 is depreciation value. You get to write off $9,000 off those properties every year. So if each property is only paying me $500 a month, that's $6,000. That's $3,000 left to write off. And you actually, what you make over, I think it's 110,000. It's just a wash now. But if you make under 110,000, the depreciation value you can write off of your own actual income. But at the level that I'm talking, it really doesn't mean much. I could care less. But I am getting real estate money for free at this point. No tax, zero tax on real estate income at that point when it's $500 a month. And not to mention, the renter is paying off that $250,000 house. So in 10, 15, 20 years, let's just say in 15 years, the renter has been paying, you've got about 40% liquidity in that house, right? Or let's just say 50 to make the number easier. So what's that? Oh, $125,000. You can refinance that back down to $50,000. There goes $75,000 into your bank account on 50 properties. So let's do math on that. 50 properties times 75,000. $3.7 million. Tax-free, mind you. Tax-free. Because all you're doing is refinancing at that point. So just imagine, like, once you start getting to a point where you have $1 million you can throw into real estate, that's just the next step. Once you start making this kind of money, your Roth accounts are making $5, $10, $15 million. Brokerage accounts making $2 or $3 million. Now you can go buy $1 to $2 million worth of properties instantly. Snap of your fingers. I'm going to go buy these properties, and they're all going to pay me $500 a piece at least. And then in 10 or 15 years, these properties are going to give me $3 to $4 million a piece, not including my stocks. Stocks, I'll be probably double that number, triple, quadruple that number. Set really extremely high goals, because anything you get from where you are to that really high goal is success. It's better than where you were yesterday. I can go on and on about how much money we can make, how much of a fantastic, fabulous life we could live. But the truth is, if we aren't mentally here to be successful in this way, you won't be. If you tell yourself that it's hard, you're not going to ever accomplish it. Right? And I always refer to Robert Kiyosaki, and I'm sure some of you have heard me say this. Statement closes the mind and the question opens it. When you ask questions, how can I make $5 million? Your brain, the gears, they start turning. You start looking for things. Right? It's taken me 10 years to figure it out. Like I was always looking at like vending machines. I can probably make about $1,000 off of one vending machine. You know, if I could get Toyota and Honda and all these places where they have mechanics that always eat out of vending machines. You know, let's say I got 10 or 15 vending machines. That's $10,000 or $15,000. But it's a lot of work. You got to go refill the vending machines. You got to drive around. You got to collect the coins. You got to take the coins to the bank. You got to make the deals with the dealers that probably already have somebody in there made a deal. You know, so then I started thinking, all right, well, what about these American Pride car washes that are out there? Those got to make some money. I did some research. Well, $15,000 a month. It's good profit, but it's a lot of work. It's a lot of work. Start thinking of other things. How can I make $1 million? How can I make 100,000? How can I do all this stuff that I want to do and make all this money with the job that I've got? Because that prevents me. That's a ball and chain on my foot I can't get anywhere with this job holding me down. See that statement right there. A lot of people make that statement. And I said it for a specific reason. I can't get anywhere because this job holds me down. Instead of saying that, I asked myself, how can I get somewhere so this job stops holding me down? And after multiple things that I went through, trying to find this, trying to find that, well, my wife wants to open a nail shop. That's a lot of work. That's 70, 80 hours a week. Never see our children or our child. Wife wants to open a bakery. Again, a lot of work, a lot of time, a lot of effort. What else is there? I mean, there's multiple things that I've thought about. Selling this, selling that. I bought a 3D printer and thought about making products and selling them. My wife thought about doing YouTube channels. I've got a YouTube channel, but guess what? That's going to pay me squat until I got 30,000 subscribers. Guess how many I've got? 700. It's going to be a long time before that starts paying. So I don't even pay attention to it. Who cares? Who cares if that's going to pay me? Because it's going to take way too long to get to where I want to be based off of what I'm trying to do. That's just going to be a bonus for me in the future. Right? So that's the goal, right? We want to be able to put ourselves in the position so that you don't have to work hard anymore. You don't have to answer to anybody anymore. You don't have to do this stuff that you don't want to do anymore. And I tell everybody that I know, everybody here on the server, everybody in my personal life, stocks is the way to do it. You do it the right way, you will get to where you want to be faster than you could have thought. You're going to see gains and profits that you didn't think you'd see. Your account's going to grow more than you thought it could. Mine has this year. I mean, honestly, when I started doing shares, I started with $700, made it 34,000. Never thought I'd make it that far. And then here I am, and that took me 3 or so years, 4 years maybe. Now here in the end of year 4, which is now starting year 5, now I'm like, well, damn, I just made 100% on my account. It took me 3 years to get to 34,000 for 700. Now I'm at 80,000, $80,000 in 1 year. And I didn't really start doing the cash secured put strategy until this year. I was mainly just doing shares, right? But then this year I started doing shares and CSPs, you know, and the shares, they're great, but if the stock doesn't move, your money doesn't turn green. Well, CSPs, well, that's turning green. Stock doesn't move and goes sideways, I'm making money. As long as it stays out of the money, as long as it stays at my strike or higher, I'm making money. And the moment it does go up, that money that I did make prior to it going up has just doubled or tripled because the stock price went up. So I guess really what I'm saying here is everybody needs to have a certain mental thought process. You know, have the correct mentality to be successful. You know, ask questions, don't make statements. Once you learn what you're looking to learn by asking questions, you start thinking of strategies and plans and setting goals. And then once you have all of that in place, now you're thinking, let's make it happen. So I'm getting messaged here. Let's see. Oh, never mind. Does anybody have any questions? Anybody?
I do.
Okay. What's your question?
What's your YouTube account?
Go on my channel, Professor Hostel, here in the education section, and any one of my YouTube videos will take you there. I think it's just called Professor-HT, but YouTube's a little bit quirky, so probably best just to navigate through one of the links, the video links. Any one of my lecture or educational videos. And I'll be honest, once I start making millions, I'm not just going to be posting videos on stocks anymore. I'm going to be posting things that I'm doing. Cars that I'm driving, planes that I'm getting on, Fiji Islands that I'm going to vacation on. I'm going to explain to everybody, stocks made this happen. The information that I have on my YouTube channel is how I got here. It's not going to be like all these other people that, I'm sure you guys have seen those stupid videos of Jeff Bishop talking about options is the only way to go, and he's on a private jet.
I hate that guy. I hate that guy.
He sells lies.
God,
He's a liar. I don't dispute that options isn't the way to go, because clearly it has some value, but he sells courses. That's how he makes his money. $9,000 a course. This is a scam. It's a scam.
Such a scam. Yeah. Such a huge scam.
It's such trash. I really
Most of those
despise
fucking
people that
YouTube
do that.
things are, yeah.
It's just such a scam, and like that's why I made my channel, my video or my YouTube channel, because
Love it. Really appreciate the info you're giving out.
yeah, of
Hopefully
course.
you don't start charging like these assholes.
No,
Once
I
you
mean
become rich.
the charging that we're only ever going to see is this server. I mean, we're probably going to offer
Great.
courses for anybody that's not in the server, because we already taught all of you guys, and we're still willing to teach people that are at the server. We're probably going to
Yeah,
start
Tilio was talking about like one-on-ones and stuff you might do. That'd be pretty
either
cool.
that or like classes to
Classes, yeah.
grab more people to join the server, right? Because we give out as much information that anybody wants. Like, we don't have like, oh, you know what? We don't talk about this or that because you're only paying this much money, so you gotta pay me an extra $3,000 to get that information. Like
Yeah,
I've always said to
that's a Jeff
myself,
Bishop move.
yeah, exactly. And I've always said to myself, if I need your money to be successful, then what makes me a teacher to teach you success? How am I teaching
Yeah.
you to trade stocks when I need your money to be successful? That's stupid, and that's a lie, and it's
That's why
fake.
it's a scam, yeah.
Yep.
Yeah. I asked those guys, I was like, well, why is your course so expensive if you're already like a millionaire,
Right.
Can't I just give you like $100? And they're like, oh, well, we need to make sure you're serious. Yeah, okay.
Serious about getting scammed.
Yeah, exactly. So glad I found this group.
And that's what we're after, right? I mean, I don't think we're ever going to raise our price anymore from what it's at right now, because we want to
That's
get
awesome.
people in here to learn. We are successful with or without you. We don't need the money. That's the thing that I keep telling everybody. We don't need people's money. I didn't start this server to make money based off of how many people join it. I started to share information because it took me around 8 to 10 years to learn what I learned. And it shouldn't take anybody that long to be successful, right? I want to help people get successful within 3 to 6 months, to be honest. And I'll also be honest that I keep using Mario 94 and FaZe as an example. 2 months it took them to learn, to practice, and to get confident in what I taught them specifically. And now they've made 100% returns on their accounts. That's what I'm after. I want to get people out of the bottom of the barrel. I want to get people out of these stupid ass jobs that we got to work on a daily freaking basis. Tired of answering it. Like, I want for everybody what I want for myself, right? I want to stop working. I want to stop bowing to my boss. I want to stop doing work for people that don't appreciate it, right? I want to be able to have 200-acre property and have solar panels, geothermal heating, rainwater collection, water power generation. Like it doesn't
Hell yeah.
it doesn't even like even if I've got millions of dollars, I still want to be self-reliant. I still want to be in a position. I'm going to grow gardens. I'm going to have all my own vegetables. I'm going to grow all my own food. I don't want to buy shit from the store. I don't want to need the energy company to supply me with energy. I don't want to need the public system to give me water. I need to be able to do all of this stuff on my own. Just like I need to be able to make money on my own. I don't need to rely on a boss to tell me whether or not I'm going to have my job in the next 3 months, right? And it's like a lot of people think about risk. And it's like, well, if I open my own business, isn't that more risky than having a job? Or if I invest my money in the stock market, isn't that more risky than having a job? Well, ask yourself, is that job going to be around for the next 3 to 6 months or 3 years? Isn't the thought that you could screw up today and you will be out of a job tomorrow, isn't that risky? Right? Like
Yeah, exactly.
if you say the wrong thing at work and they don't like you anymore, this guy's got to go. I don't like the way he's talking to me. You're gone. They're gonna find a way to can you. Tell me that shit
Yep.
ain't risky, right? That's the most risky thing out there because you're walking on eggshells the whole time you're at that job. So unless you do
And
what
if you
somebody
rely on a
says,
job too much, you don't figure anything else out. That's could
right?
be a huge downfall if you lose your job. Like my father lost his job and it just ruined him. He didn't know what to do.
Yeah.
So
And they say, like the job that I work right now, it used to be in New York, used to be headquartered in New York, and they moved it down here where I live in North Carolina. Thousands of people lost their jobs and they rehired people down here, right? When's to say that they decide to move to a different state that offers them better benefits than North Carolina? Now I'm instantly out of a job.
or fucking expected to move cross country.
Well, I mean, sometimes like when they moved from New York to down here, they didn't offer those people the chance to move. Only the ones, only the ones that got to move are the ones that when they said jump, they jumped. And they're perfect slaves. You're a perfect slave. You get to come with us because you're gonna be a slave down there. You're gonna do what we say.
For the rest of your life, yeah.
You're gonna like it.
We'll offer you a 50-cent raise. Oh, hell yeah.
Right. It's like, who wants to live like that, man? If you're late for work, you get written up. I mean, here's your bullshit bonus. I get a bonus. I get a bonus every year. They take 50% of my fucking bonus.
Jesus Christ.
Are you kidding me?
And then your 50% is tax probably too.
Well, no, that is the tax. The 50% is the tax. Yeah.
Oh, that's fucking outrageous.
Yeah, I'll get a $12,000 bonus, and I get 6,000 out of that. You fucking kidding me? You know what I'm saying? Like,
Yeah.
and what they do is they'll give me like a 2% raise, and then here's a bonus. I want the bonus in my raise. Nah, we can't do that. Hell no. Because that means my pay goes up. Right?
Exactly.
And every year they have to give me a raise. And if they put my bonus into my raise, I'll be making $150,000, $200,000 in no time. Because it goes up percentage. It doesn't go up dollar amount. But the bonus benefits them because it lowers their tax threshold. This is how corporations don't pay taxes, because their workers pay the taxes. They pay
Wow.
all this money to these workers, and then the corporations pay nothing because their tax liability is now on the workers. The government wants investors. They want people to open businesses and hire others. Because let me explain something. If you got 2,000 employees and they all are making $50,000 to $100,000, number one, all of that's taxed. Let's say, for example, I make $20 million a year, and I've got 2,000 employees that make, let's just average it out at $75,000 a year, right? So 75,000 times 2,000, that's $150 million, right? Now let's say that for a second here, the government's going to take 30% of that, right? $45 million. I'm making $20 million a year, tax free. But my business that I employ 2,000 people that make $75,000 is paying $45 million in taxes. That's how I don't pay taxes. Now, to add to the top of that, these 2,000 people, they drive cars, pay taxes on those cars. They pay insurance on those cars. They drive on the roads, pay taxes for that, right? Because when you renew your registration, there's your tax for driving on the damn road, right? You go get gas, you're paying tax on that. You go to the store and you buy food, paying tax on that. When you go buy iPhones, you get an iPhone service plan, paying tax on that, right? I need to keep going. You want to go buy some new shoes, taxes. You go home, turn on your lights, taxes, right? When you flush the toilet, taxes. When you turn on the water sink, taxes. I mean, it's never ending fucking tax. You get TV, so you can watch TV, taxes. I mean, we get taxed 100 freaking times in our daily lives.
Good Lord. Man, I didn't even think of it like that.
So
Yeah.
that's why they want investors. That's why they want people to create these big businesses. And that's why they pander to these big businesses when they want something, because they know that they're going to create revenue for the government. It's those guys that create the revenue. You hear all this talk about tax the rich, tax the 1%. They're not going to tax them. You know why? Because that guy that's making $1 billion, his employees that he pays, they're making, all those employees is $10 billion. So the government gets to tax that 10 billion instead of that 1 billion. Right?
Yeah.
And that's just from income only. And then they go out, they spread out like cockroaches, and they start eating, going out, drinking, watching movies, doing this, doing that, doing this, doing that. Every one of those activities is taxation. Think about how much taxes you pay.
Oh, I hate taxes.
And
Yeah,
most people only consider the tax that comes out of their paycheck. They don't even think about how much is my gas tax, how much is food tax, how much is utility tax, how much is mortgage tax, how much is ownership of cars and houses tax. Tax.
Good Lord, yeah.
I mean, think about it.
Didn't think of it.
It's insurmountable. We're actually probably paying close to 75% tax of our income.
Jeez.
I mean, when you add
Just
it all
actually-
up,
Like, we pay to live. It's fucking crazy, I hate it.
but there's nothing we can do about it. Absolutely nothing. No matter where you go in the world, they're gonna rape you for taxes. Well, let's be real.
Yeah.
It's
And,
unavoidable. And this is why I stress Roth IRAs so much. Because yeah, it's not quick money, it's not sexy. But you get to avoid the government telling you, I want your money. It's my money now. And you don't get to have it.
For Roth IRAs, is it are there certain types of trades you can't do, or what's the difference between a Roth IRA and like a standard account?
You can do all the same types of trades.
It's not taxed.
And it's considered a retirement account.
But you gotta wait until you're like 59 or something.
How do you open up multiple Roth IRAs, like the backdoor strategy?
You don't want to open up multiple Roth IRAs because no matter what you do, you're only allowed $6,000 contribution no matter where it goes. So it's better just to
Yeah,
have
use
one.
parents. I'm using my parents. That's
Yeah,
my
you
little
could do
trick.
that. You could do that. You could open up one in both your parents' names. So if you can put $18,000 away every single year, you can have one for yourself and two for your parents, as long as you know your parents are trustworthy. Um, assuming they are, then you got three accounts with $6,000 a piece. You can easily trade every yearly and add another 18,000. I mean, that's a really fast way to grow it. It's kind of what I do with my
Mhm.
wife and myself. We got two accounts. I put $12,000 a piece. Or I'm sorry, total between the two of us, 12 grand a year. Right? So I grow both accounts equally. I mean, I mirror my trades so that this trade that I took today on, let's say QS, that I did last week, I did the same thing in my wife's account, so that they're both equal. It's hard, honestly, to manage multiple accounts if you're not mirroring them. So keep that in mind if you
Good idea.
try to do something like that. You kind of want to mirror it.
Mm-hmm.
And then you just can't withdraw from the Roth IRA until you're like older.
Yeah, because the interest, right? And it's going to gain 6% over the course of 30, 40 years. That's a lot of money.
Well, 6% is tiny. I'm looking for 100% a year.
No, I'm talking about the
Percent of-
interest.
There's no interest.
Wait, so I thought that you put in your 6,000 and it gains interest over time, which is why it makes it so valuable, and it's tax free.
When you open a Roth account and you contribute to it, if you just throw money at it, it's not going to do anything but sit there.
Yeah, well, obviously, because you have to trade on it, so that way you can gain more profit.
Yeah, the only returns you're going to get is based off of the way you trade.
Okay. What do you think about mutual funds? I know a guy at work. He's a real old dude, probably 60. Comes from the UK, and he said that he made $16,000 over the weekend on one of his mutual funds.
Does he have like
He has
$10 million in there?
He has like I think like 400,000 on one of his accounts.
Well,
He's like
that's believable.
Yeah, he has 12 mutual fund accounts opened up.
I mean, if he made $16,000 off of 400K, let's see what the percent of that is. Oops.
But like long term, what do you believe? Like what's your opinion on mutual funds?
Mutual funds is basically an ETF that's managed by someone. It's a waste of time. I can make more returns trading my account myself than paying somebody to manage a mutual fund for me. Mutual funds generally gain 4 to 8% returns a year, yearly. It's a yearly thing. It's not monthly. I'll think about that for a second. 4 to 8% a year. All right, so let's see for a second. Maybe that makes sense. 400,000 times 0.08. He made 4%. If that's a year, that it took.
No. That's not a year. That's a weekend.
There's no way he made that on a weekend. There's no way.
He said that he made like this year alone he made like 60K. Is what he said.
This year.
2020.
So that sounds like an annual thing. So 60,000.
Possibly like a quarterly earnings, right? Comes out.
No, it doesn't work that way. It's annually. Mutual funds are annually.
So odd.
So
All right.
8% off of 400,000 is 64,000.
I hear what you're saying. What are your thoughts on AMD's earnings coming out?
I don't play earnings because I don't like speculation. But I can tell you what they look like on the chart. I mean,
you just strictly statistics. Graphs.
Yeah, I mean, I like looking at technicals. I like looking at charting. If you play speculation, you might as well speculate the roulette table.
No, you don't play both sides?
How do you play both sides based off of speculation?
Well, for example, not just speculation, but let's say
That's what earnings is, though, right?
like when Yellen came out and talked about dumping a whole bunch of debt into the market so she could basically they're gonna prop up the market again and it's gonna go fucking berserk. Like that's not just speculation. That's a little bit, right?
It is speculation because who can confidently say the market's going to go up because of that? Right?
I watched this guy and his name's Gregory Manarino. I really like his macro analysis. But I hear where you're coming from.
Yeah, I just don't. I'm very against speculation because that's purely what it is, right? Earnings plays is speculation, news is speculation, which is what Janet Yellen is doing, right?
Mm-hmm.
There's no barometric indicator that says, okay, if she dumps X amount of dollar, do you even know how much she's talking about dumping into the market, or was she just talking?
Well, she was just talking, but
there you go.
but sometimes they say stuff like when Powell comes out and says something, and it makes the market jump up.
Well, market's just reacting emotionally. There's no technical analysis behind somebody's words.
What about do you think we're gonna head downward ever, or they're just gonna keep printing more because everybody's saying that it's like looking like we're about to go into depression?
The market is a cyclical thing. It never continues up. There will be a downturn. Now, how big?
Hard.
How big? That's the question. We don't know. I'm saying 5 to 10% from our highs, and 5 to 10%. So, example, AMD, right? $48 is their low, 99 is their high. 10% off of that high. All right. So, we're looking at $10 drop, which will probably
that's not bad.
I mean, it's a 50% retracement basically from 73 to 99. That's a 50% retracement.
It'll grow itself back though. Come on, big tech's winning right now.
But again, my point is, and I want to try to hit this home. Speculation is just that, news, earnings, people's whatever they say on TV. It holds no water. Yeah, it might make the market react in a certain way briefly, but what's it going to do long term? Or as you were saying, macroeconomics. What's it going to do long term? No one knows. All I can confidently do and tell you is based off of charting and say this is the support area. It's in a trend up or it's in a trend down. It's setting higher highs and higher lows, whatever the case. I can tell you those things based off the chart. But when it starts, when we start talking about earnings, start talking about news, start talking about Janet or Jerome,
it doesn't hold value.
Yeah, exactly. Take it with a grain of salt.
Yo,
good.
Is it usually a good sign when a stock becomes tradable through options?
I would say that it's neither bad or good. I mean, it just means that they're allowing derivatives to be traded off of that stock. And options is manipulation if you really think about it. It's just stock manipulation, purely and simply. That's all it is. Because you can manipulate it, you can short it, you can go long on it, and with options, we're controlling 100 shares. Just think about that for a second. If you're buying straight up shares of AMD, you need $9,900 or $92, which is the current price. If I'm buying 100 shares with options, I can get it for 600, 500, 400, 300, 200 bucks. Right? I can manipulate the AMD stock with options, and that is the purpose of it, is to manipulate it. They say that it's to leverage the stock in your favor. They say that it allows you to I just drew a blank. Look up, I had a really awesome video that I forgot to, it's been a while since I had it, but it talks about derivatives and how every government, how their debt versus or is compared to derivatives, and they put it in a scale where they do pallets of $100 bills, and there's some countries out there where very third world countries where their derivatives of government debt is basically like a busload of $100 bill pallets. But then they start comparing the United States and China. United States is they use the what's that tower in New York City, Empire State Building. They basically showed where 20 of those stacked full of $100 pallets is how many derivatives that we've got. And then they added China in, and China's 100 of them.
Jeez.
And basically how they do it is they print money. They throw money into the system, and it increases the amount of flow of the money. I forget, there's a specific term that they use for the flow of money. But we've been printing billions, trillions this year and last year, trillions. China is 100 times ahead of us in money printing. Nobody knows this because they don't talk about it. But China has devalued their currency so far just to keep up, just to compete with us. That's how their GDP is doing better, and that's how they have a 7% growth, because they've devalued their money 100 to 1 compared to the US. 100 to 1. And this was 5 years ago. I haven't looked at it since recently. This is when Obama was, last couple of years in office. And China was like 12% growth or something. And they talk about how China wants to, or how China is buying a ton of gold. They're mining. They've mined the most gold in the world, more than all countries combined every year for the last 10 years. You gotta ask yourself why. And they're not telling anybody how much they've got. So there's a chart out there. I think it's on Swiss America. There's a chart that shows you the bullion holdings of every country. The United States has the most. China's gold bullion holdings has not moved for a long time. I don't even know how long. It's been years.
It's like petroleum, right, Hostile?
It's like what?
Petroleum, like oil. The U.S. purchases but never uses its reserves.
No, I wouldn't say that. It's different. That's a different beast. Gold is very. The way I look at gold is the country that controls the most gold is the one that calls the shots. When the U.S. dollar was on the gold standard, we called the shots. You know why we took the U.S. dollar off the gold standard? Does anybody know the answer to that?
Because they banned it.
No, not at all. They actually made it legal to own when they took us off the gold standard.
Oh, yeah.
Right? It was in 74 with Nixon. I think it's 74.
Yes.
What happened at the same time? What did the United States do then?
We had the oil crisis.
The
right?
oil crisis.
And that shit inflated.
Guess
everything.
what deals we made that
We would get
benefited
off
the
the
US
gold.
dollar?
We would get off the gold standard.
No. I'll tell you. We made deals with OPEC, and we said, you guys only trade US dollars for oil. That's what made the United States, the US dollar, the world reserve currency, because everybody in the world needs oil, And if only the US dollar is used to trade that oil, that makes the US dollar powerful, extremely powerful.
Question. So, so you could say when the oil props up the market, that's maybe the reason why the dollar gets a little stronger or weaker?
Well, it's hard to compare the dollar with oil because when one goes up, one goes down. Um, there's a lot of things that affect it. It's not just one single thing.
What's your indicators, like your stock indicators that you go to when you look at the market, pre-market?
I don't.
Oh, okay.
It's pointless for me. I just pay attention to the stuff I'm interested in trading. I trade that. I look for things that are high implied volatility that are pretty decent stocks, and I can trade those and get premium. I don't
That's
pay
badass.
attention to futures. I don't pay attention to the SPY or the Dow. It's honestly pointless to me. It's just all noise. I mean, some people find value in it, and I'm not saying that there isn't. There's just none for me. That's all.
Mm-hmm.
But what I can say is when the dollar goes up, gold and silver goes down.
Mm-hmm.
When oil goes up, typically the dollar goes up. When there's war in the Middle East, and let's say Iran closes the Straits of Hormuz, oil skyrockets, gold skyrockets, US dollar falls. That's a weird one. How does that happen? It's fear. Fear makes things like that go bad.
Fear
People,
versus greed.
well, when people are fearful, they go into gold and silver. And the reason why oil would go up is because it's a crisis, and it negatively affects consumers, but it positively affects producers. The people that have something to gain with war, when it comes to oil, producing nations, Saudi Arabia, Iran, Russia, just to name a few. There's quite a few, but just to name a few, it benefits them. You always wonder, like, why in the past was oil so expensive? $100+ a barrel, 150. I don't know, didn't it get to like close to 200 or something at one point? And that was during the Obama years. If the United States wants to deter its enemies, you would think that they would want the price of oil to be worth nothing. Right? You take the money out of the enemy's pockets, they got no way to fight war, so there is no war. But then you got to ask yourself, well, what is the country, the people that actually run the country, not these foolish politicians, the ones that actually run the country, how do they make money?
The banks.
Well, the banks make a lot of money, yeah, but I think the real money's in war.
Yeah. I have a
So,
question. Number one, do you think we're at a currency war? And number two, why are we devaluing our dollar so much?
we are absolutely in a currency war with China. And we devalue our dollar because it's a world reserve currency. There's nothing out there right now that prevents us from printing money because we're number one. The US dollar is number one,
Hey,
or
Hasa,
as they call it, the greenback. Yes.
isn't the reason why we are devaluing the dollar a little bit because they want to weaken the dollar so we create jobs in the US?
I mean, that could be an argument, and not necessarily to create jobs, but to have more export. Because when we devalue the dollar, it's cheaper for other countries to buy our products. But for us, so if somebody buys $100 billion worth of our products, we devalue our dollar, that $100 billion is still relatively going to be the same amount of money for us. But for other countries, when their money goes up in value compared to ours, it's cheaper for them to buy our products than say China's. So if we devalue our money compared to China and we get it to where our products are cheaper than China's because we devalued our money, we're going to get more people buying our products, thus increasing
Yeah.
GDP and exports.
Yeah, that's what Trump was trying to do.
And also we would increase our suppliers, so there'd be more jobs, and then it would help the natural rate of employment.
Well, it would increase the producers for sure. It would actually decrease the suppliers because the producers are getting more supplies.
And then it would probably boost the market too.
Well, of
Yeah,
course.
with the PMI.
That's just brilliant. Damn, that almost happened.
I mean,
Yeah,
it did
well,
happen. Trump created jobs.
Mhm.
He created more exports. It put more
Mhm.
money in more people's pockets. The suppliers had to make more product. The producers had to export more product, and everybody went home with more money, right? And I know you all have probably heard that when Trump was talking before, when he first started his campaign back in 2016, he was saying they sold us out to China, they sold us out to Mexico, they sold us out to Japan, they sold us out to Canada, they moved all the manufacturing out of here, out of this country. People lost their jobs. That's true, right? It's absolutely true. People lost jobs because manufacturing's gone. No more producers, no more suppliers to supply the producers. Every one of those people no longer have jobs. They all no longer have income. And then everything else suffers. That's why you see a lot of these towns went to shit. Detroit went to just complete trash. There's places in Ohio and Tennessee and Kentucky that went to complete trash. Pittsburgh, steel country, went to trash because they moved steel out and now it's all produced by China.
Yes, it started with Clinton, right? When with the whole globalization part that he decided to stop immigration by setting jobs over there and increasing their economies. That's where it all began.
Yeah, I don't know the details that granular, but what I can say is that China, the reason why they have a powerful military now, the reason why they have all these huge ghost cities, and the reason why their GDP is up is two things. The corporations here in the United States sold our jobs to China, and the consumers of this country purchase all their products from China. Everything that we have here in this country is made in China, 90%. So we've built China. China didn't build China. We did because we buy all their products.
Mm.
And we don't get to choose. Corporations are the ones that choose. I mean, think about it. Just think about it. They made money because of us. The United States is the biggest trade partner with China. It used to be $650 billion in trade deficit with China. 650 billion a year. That's I think their economy was 900 billion GDP. So 2/3 of their economy was from US consumers. 2/3. And that's what Trump was trying to get back. He's trying to put that 650 billion back into the United States. Now, I'm not supporting or denying any politician or party or whatever the case. I'm just saying the facts, right? That's the facts that I've come up with, that I've seen. Not that the media showed me, not that YouTube showed me. It's the research that I've done. I research things like that just as much as I research stocks. I mean, look at my name, never ending research, and it just doesn't happen. It's not just with stocks. I research everything. I don't believe anything anybody tells me. I go find out for myself. And this is real data.
Do you have like 250 IQ?
No. Well, I don't know, but probably not.
You might, bro. Sound
could
very.
be.
I love your analysis. Thank you so much.
You're welcome.
Yeah, you just pointed out all the we did our research or our study in my school, and every single thing that you said, we came out with the same thing.
Interesting.
Yeah, every single thing. Like we came out, we were doing that, helping one of the guys get his doctorate in, I guess his doctorate in finance, and every single thing you said, we pretty much came up with the same decision. He's doing his dissertation right now, so it's what you said is 100% right. The only thing you were
Yeah.
missing is just how he came up onto the foreign exchange rate and how everything goes moving forward. That's the only thing you're missing.
And I don't know too much about foreign exchange, so there's
It's
my gap.
let me give you a quick example. It's just basically playing hot potato. Don't get stuck with the hot potato. That's it. That's all you need to know.
Oh yeah, yeah, yeah.
Oh man, that's crazy.
I mean, it's pretty wild how all this stuff, it's an intertwined spider web with millions and millions of spool or whatever you call their web lines, and it goes across the whole world. And the United States is the spider. We're the ones weaving the web across the world.
Of debt.
Well, of everything, and just debt, profit, war. I mean, it's like we're one of the United States' largest expenditure is the military. $780 billion in military equipment. One of our largest exports is military equipment. We sell to everybody except Russia. I mean, we sold to Turkey, we sold to Saudi Arabia, we sold to
We
Israel,
we
we
made
sold to
ISIS.
Egypt. We made ISIS. I believe that absolutely.
And what
Created
about
by
all
the
the
CIA.
what about all the guns in South America and the crack cocaine in the 80s?
All funded by the CIA.
Yeah.
I mean, there's a theory out there that the CIA brought in the crack cocaine to the black and brown neighborhoods so that they could kill them off.
Mm-hmm.
That's a theory that I wouldn't put past them one bit. I mean, I'm more inclined to believe that than anything.
Oh, it's like the opium back in England back in the day. Same thing.
Yeah, I mean, with all drugs, with fentanyl today. You know, the Mexican government and the U.S. government work with the cartels. They're not enemies. They're buddies. You kidding me? Those guys are all butt buddies. They create fear and hysteria. They create death and chaos because that's what they want.
Twisted.
They say not. Here's a totally different one, but very
Greedy,
similar.
man.
They say no texting while you're driving, but then it's against the law. But then no one's getting pulled over for it. No one's going to jail for it. No one's getting fined for it. You know what's happening? People are getting into crashes, and guess who's making money? Insurance companies.
Insurance, yep.
And guess who mandates you to have insurance? The government.
The government. Yes.
So there's so much of that shit going on. It's freaking it's so far beyond mind blowing at this point. It's happening everywhere. And it's like that video I posted. No one even bothers to give a shit.
We're
No
being
one.
farmed. We're being farmed like a bunch of sheep. It's crazy.
I don't even know. I mean, I think the ultimate goal is for depopulation, have just enough people on the planet to be slaves for the ultra rich so that they can live in their kingdoms, kick their feet up, fly to other planets while we slave for them. That's the ultimate goal, in my opinion. They don't want us to be smart. They don't want us to have the things they have. They just don't want it. We're not good enough. But we can be. Trade and learn how to be successful doing this stuff. We can absolutely be. And the more people that we empower with money, the more we can put in positions to fight back with these things. Now, my goal is obviously not to fight back because we would lose, right, if we fought directly. But indirectly, quit working these jobs, work for ourselves, use the stock market, make money that way, then they have nobody to slave for them. Long-term goal that probably will never be met, because no matter how many people we get here, we need millions on this server.
That's like the biggest underground operation ever.
We need 200 million, 150 million people on this server before that becomes anywhere close to fruition. I mean, just imagine that, though. 150 million people trading the stock market. This shit would be volatile as hell.
Oh man.
Big hedge funds already are complaining for the so-called Robinhood generation, which is us, because pretty much we all write out like trends and then we squeeze them out. I read our paper on Bloomberg and in Cranes about it. They're all upset the fact that there's platforms are making trading so easy that big hedge funds are getting squeezed out, and they're trying to regulate that.
Yeah.
Is it a question at all that these trading platforms used to cost $12.95 per trade plus $4.95 per option? Did you know that TD Ameritrade used to charge $12.95 per trade plus $4.95 per option?
Yeah, and if you call them, it was $25, right?
If say that again.
If you, for example, that was every trade, but if you were all timer and you had to make a phone call to TD Ameritrade, they will charge you $25 per trade.
Oh yeah. If you required their assistance to trade, yeah, they charge you $25. Absolutely. But you gotta remember, I'm talking round trip trading here. So $12.95 plus $4.95, that's $17. That's just to get in. You gotta get out. 17 times 2. That's how much it costs. That's why nobody traded before except hedge funds. They control the market.
What stocks are you looking at for tomorrow?
Well, I have this core list that I've been paying attention to. Workhorse, TNA. I want to see Space drop. Rocket should be pumping soon. I'd like to see Rod come down. I'd like to see QS pump. I don't know about PLTR. I'd like to see Pets come down. I'd like to see NUGT pump. Netflix is killing it. I just stopped watching them when they pump like that because I was trying to get in at a low or at a support level. I'm looking for mRNA to come down again, somewhere to the $70 range. MO down 36. LMT needs to start pumping pretty soon. My break even's at 350 on them with shares, so I'm down a little bit, but it's okay. JMPR should be coming down soon. I missed out on Jamia. Fastly, I think it's gonna. I don't know. That might be a cup and handle potentially. I'm not really paying attention to Exelon right now. DBX, I want to see come down. CRSR, I'd love for this to come down back to 35. Not sure about Cake. I don't know how I feel about them. Banks, I expect this to start coming back down, which it is. BYND, I want to see it fill that gap. Not sure about Baba. That's a wild card to me. And Apple, I'm hoping it starts doing its nice pump soon. I mean, it is doing its pump, but I'm talking about real pump.
Any news on Jack Ma?
On what?
On Jack?
He came out. He's out in the public now. So the stock jumped when he did, which is this jump right here.
I like Shark's Fubo call. That was a good call.
I don't pay attention to those guys because I mean I do my own stuff and their trading is opposite of mine, so I don't even go onto their alert channels to be honest with you.
Gotcha. Oh, looks like a good list. Thank you.
I got a bigger list. This one. This is stuff that I've been watching over the years. So does anybody got any other questions? I'm probably going to end this very soon. Oh, Abby, your mic is really bad.
You mentioned workhorse.
Yes.
Can you talk about it a little bit?
What's squeezing? I expect USPS deal to make this thing rip if they make the deal. If they don't, it'll get crushed. It's supposed to happen in the first quarter, which is January, February, March. So that's about all I got. I mean, it's probably going to do its jump back up to this trend line and then come back down to this one, and it's just going to squeeze itself all the way until we get some news with the deal with USPS. I really like CSPs on this. If I can get it back down to $21 or so, I really like CSPs on this one because it pays a good premium. At the money is 280. If I can get it down to 21 at the money, then it'd be nice.
So just hold for now.
We got shares or options?
Shares.
Yeah. It's tricky because the deal could go either way. Right? And if it goes in the right way, then you're going to see it break 31.45. If it goes in the wrong way, you're going to see it break 15. So there's risk. But I think it might get stopped at 15. I think 15 will be its support. Boy, would I love to grab some at 15, though. I'll tell you that. Look at all this strength at 15.
Yeah, that's where I got in.
Oh, well, then you're in good shape. How many shares?
149.
Well, if it drops, grab 51 more. Make it an even 200. And then next time it hits resistance, sell covered calls, 2 contracts.
I'm still learning those. I haven't gotten that far yet.
Watch the real wheel strategy video that I made with FaZe in my channel.
Which one?
It's called the wheel strategy.
Yeah, it's actually a good one. I watched it. Really good. You guys explained it very well.
The wheel strategy. Got it.
Okay, so what do you think about AUY gold? I got a couple contracts on it. I think it's going to jump back up.
Well, I know gold's going to jump. It's just a matter of when. Hopefully you bought time.
Yeah, I did. I put like 3 weeks out.
That's not enough.
Shit. Maybe I'll.
When I say
I'll figure
time,
it out.
I'm talking 6 months to a year.
Yeah.
If you see profit on those at all, anytime in the future, take it and get out.
There are just some cheap calls I just wanted to mess around with.
If you see profit, take it. Don't hesitate. Trust me. I expect gold to really start making its move by March or April.
Okay.
Does really well in June. It does awful in September.
Oh, by the way, I can't remember if it was you, but when I first joined this Discord like 6 months ago, you guys gave me a Boeing call, and it turned like $100 into $1,000. That was amazing.
I think that was Tilio's.
Yeah.
Because again, I don't buy options.
You only do shares?
I sell options.
Oh, you strictly sell options?
Yeah.
Wow.
Nice.
What is that?
I'm trying to get into selling options, and I know you do lectures on them. Is there any lectures I can go back and look on, like any specific date that you went in and talked about?
Yes. Let me see. Hold on. The 22nd, I posted a video.
Thank you.
That's mainly phase going or option selling. And again, the wheel strategy, that video that he and I made, that one discusses selling pretty well as well. But this one's probably the better one to listen on because I know he went over some basics there. I think. I mean, I didn't listen to it. I wasn't even here when he was going over it. I was eating dinner and stuff. But I'm confident in FaZe's ability to explain option selling because I'm the one that taught him. So he's doing fantastic. So he's a great resource.
All right, thank you.
Anybody else have any questions?
I have a simple question.
Okay.
I just joined, and this is I think my first day, first 24 hours on this chat, and I think I'm loving the information I'm getting so far. And I'm new to options. I've lost a couple the past week. How do I minimize losses?
What's your account size?
Pardon?
What's your account size?
My account size,
Yes.
as in my total amount I have in that account or something like that.
Correct.
4,600. 4,600.
So first thing you should do is make sure you don't overtrade. So 5% of the total account in any one trade, no more than 50% at any one time in the market. Second thing I would suggest is, I'm assuming you're buying options. Is that right?
Yeah, I was initially doing just shares, and I got introduced to options I think about 2 weeks ago. And yeah, I'm new to options basically.
I would learn the Greeks. I would learn charting. Go on my channel. There's multiple videos for those kinds of things. Actually, all the videos that I've created that are not lecture videos, you should watch. And if you're doing option buying, if you're swinging, I would go for long-term time frames. Doesn't mean you have to hold it for long. You actually want to get out. When you buy options, you want to get out as quick as you can with profit. So
Right.
the further out you buy, the better chance you have of making money. So don't buy short-term stuff, especially as being a new person. So if you buy something, somebody gives you an alert and you go to buy it, get 3 months out, 6 months out, a year out, whatever you can afford. The further out you go, the better chance you have of seeing returns. And
Right.
then as you get better and are able to find better entries and have better temperament, meaning you don't let stuff ride too long, you take profits soon, you're not emotional, then you can start buying short-term contracts. But personally, I would go for long-term stuff because, if you miss out on something or you get in a little bit late, it's not really going to be that big of a deal. And buy options at support levels. And if you don't know how to determine support and resistance levels, I made a video for it, so I recommend you watch those videos.
What's the name of your channel here?
It's in the education section called Professor Hostel. Towards the bottom, kind of above this voice chat. Right above it.
Let me scroll down real quick. Intro to option. Okay, Professor Hostel.
Yes.
Okay, right here. Let me like something. All right, yeah. And how often is this? Are you the one who does most of the videos, the lectures?
I do mine Sundays and Thursdays at 9 p.m. I have Mario that does Sundays at 8 p.m. I have FaZe that does his at 8 p.m. on Thursdays. Cal does his
Right.
on Mondays and Wednesdays at 8 p.m.
Right.
So if you look at announcements channel, there's I think MMA posted a schedule for the lectures, and it's all Eastern time.
Okay, I just saw it. Is MMA Mario?
No, Mario 94 is not MMA.
Oh, okay. You guys are doing a great job, and I really appreciate everything. Like today, you had a bunch of knowledge about China and all that amazing stuff, and I really appreciate it. You guys are doing a good job. Thank you so much.
You're welcome, and thank you.
Sir.
Anybody else have any questions?
I have a question for you, Hostile.
Okay.
I was watching Kathy talking about she thinks that Q4 earnings are really gonna outdo themselves this year. So do you think we can see some big jumps on earnings for like big tech companies?
Likely. I think Apple is going to be one of them. But here's the thing that I think is after their earnings do their big rips, I think the market's going to come down after that.
Yeah.
It's going to be a time for sell off.
You talking about like the next day or like later on?
No, week or two.
Yeah.
Something like that.
Big market sell off.
I think so. Yeah, I'm calling for right before February expiration. Options.
Yeah.
Monthly options. 219.
Tilly has been kind of saying the same thing. I've heard him say that a bunch recently. And he always says like weather could be any day now, or in a couple of weeks, or any week now, right? And then do you think it's a good idea to kind of maybe range back the amount of trade they have open at one time?
Well, personally, I would say that you should go into cash. If you're in positions right now, take profits when you got them, and then sit on cash for a little bit unless you find a really amazing opportunity, a home run. You get a home run, otherwise you should just sit in cash, let the market come down, and then guess how much opportunity is going to be there then? Tons.
Right, yeah. Yeah.
Or you
Okay,
could get into positions that are going to benefit from the market drop.
Yeah, just farther out.
Well, no, I mean, what I mean here is gold and silver. I think
Right. Oh.
with the market drop, we're going to have a nice pump on gold and silver. So
Yeah.
that's kind of what I'm thinking.
That's interesting. Yeah.
Because when people run out of equities, they run into gold and silver. They run into places that are comfortable. Those are it.
Right.
You think silver's going to pump right now?
Not at the moment, but it will in time. I have leaps on Barrick Gold and Silver ETF. I have WPM shares. I have P-Silv shares as a Sprott ETF. I got a decent amount of position. I got probably 2, 3, 4, 5, $6,000 worth of precious metals positions, but that's $6,000 out of 80,000. So
cool.
And I expect the 6,000 to turn into 12,000.
Would buying options on Barrick Gold kind of be just as valuable if you can't, don't want to buy gold?
Well, Barrick is GOLD.
Yeah.
I would buy leaps. I have leaps actually, so I got January 2022 leaps, 27 strike. Honestly, wish I would have gotten closer to at the money, but it is what it is. At the time, I was kind of over leveraged in my position, so I could only afford
They're not that
that.
expensive. Yeah, I'd expect them to be more.
Well, I personally like WPM. I think they're going to move more. Silver always moves more in percentage. If gold moves up 1.5%, silver's up 3%. If gold moves 3%, silver's up 6 to 8.
Right. These aren't too expensive either. The silver, the WPM.
Yeah, it's beautiful. I'm telling you, WPM.
Yeah, for a year out.
By far the best. People sleeping on it. Look, WPM is down right now at its support levels. What, 6-month lows? I'm still up 100%.
When did you get into those?
COVID lows. I got them for $18
Okay.
a share. I'm up over 100%, and I've got it in 3 accounts. My
Yeah.
only regret is I didn't buy enough. I think
Yeah,
it's a
no, that's
solid
interesting.
opportunity for options. I would get more, honestly, if I wasn't down as it is, or if I wasn't in gold and silver right now, I would probably go grab some WPM.
Right.
I just don't like being in
Okay.
the same thing too much. And like I said, I already got shares of WPM, so I kind of don't want to, get more WPM. I kind of want to do something else, but it is what it is.
Yeah.
All right. Anybody else?
I have a question.
Okay.
So, like, I want to play GameStop. What do you think about buying an out of money debit spread? Is that okay?
I think you should stay away from GameStop.
Stay away.
Yeah.
Oh.
That is a highly pumped stock that I just.
But let's say like I want to gamble because I have like extra cash on the side. Would it be better if I buy out of the money?
I would gamble with something else, to be honest with you.
Really? Why?
Because you got to remember, a couple of months ago, that stock was $4.
Mm.
You really want to touch that? What if it goes back to $4? I mean, yeah, if you're doing debit spreads, it's really, you're not going to lose but what you paid, but I just
Yeah.
don't see any real benefit in playing that kind of stock. Do debit spreads on Tesla or do debit spreads on Apple. Apple would be way better. Way better. You're guaranteed to see profits on Apple if you do debit
I don't
spreads.
see a lot of people do out of money debit spread. So as long as it's higher than my sales strike price, then I'm good, right? I just
Debit spreads are a little bit more tricky. So I think the best way to do those is like a week out, go 2 or 3 strikes out of the money, and you gotta have the direction right.
yeah.
So you need theta 2
So,
decay,
so
you
I
need the
can't go
stock price to
too
go
far.
slowly up. Yeah, I wouldn't go too far out of the money because you need it to go in the money.
Mm.
It must go in the money or you're really not going to make much. I'd honestly reach out to FaZe. He does debit spreads. I think he'd be a good resource.
See.
I don't really touch debit spreads. I used to do a lot of credit spreads. I don't really touch those either because there's just too much risk.
For debit spread? I thought there were less
Credit spreads.
Oh, credit spread. No, I'm talking about debit spread, yeah.
I know. That's why I said go talk to FaZe. He does debit spreads, so he could probably give you a little bit better information on that.
So, but it wouldn't be that bad if I buying a debit spread than a call on the GameStop, right?
I think
it's this. I guess it's the same thing.
You're playing GameStop. To me, is FOMO. That's what GameStop is. If you're playing GameStop, you've got a case of the FOMO. Your money can be better utilized elsewhere, in my opinion.
I mean, I was thinking like if I hit out on money 1:8 ratio, that's pretty good.
Well, you got to remember that what you can make. There's a reason why it costs. There's that much premium because it's such a FOMO stock right now that I would avoid it. Put your money in something else. That's.
Okay, thank you.
Just don't throw your money away. I think you're throwing your money away if you mess with GME.
Okay, thank you.
Anybody else?
Do you think Twitter would be a good buy right now? I was thinking about getting into it. They had the big dump, smaller dump recently because of Trump when they banned him.
Personally, I'd like to see Twitter come down further, somewhere right around $43 area.
Okay. Yeah. Yeah, if it breaks the trend level.
Yeah, I mean, again, market's coming down soon.
Right, yeah. Yeah, don't want to get into anything too long term.
Yeah, just find some stuff that if it doesn't scream amazing play, avoid it. It's okay to sit out of the market for a little bit.
Yeah. Yeah, thank you.
You're welcome.
You think SPY puts a year out will pay?
Yes. Let's see. Yes. How much do they cost? Oof.
Yeah, they're expensive.
It's Ivy. Ivy's only 23. Yeah, I think those will pay. But man, they're pricey. Question is, where do they go? Where does it go? Let's see, this maybe 360 I could see happening, so $2,500.
I was thinking if we hit like 390 or 400 to get a year out SPY puts.
It could totally pump or print. That one, I mean, if I had the money to throw at it, I would probably do it. I mean, look at this. From what's that? Late October, early November until now. That's almost 3 months of pump. This shit's gonna come down, and I would say 50% retracement.
You don't think the retail traders are going to keep pumping the market?
Nah. I don't know. I could be wrong. I'm not always right. That's obviously very
It's
obvious.
hard to tell.
Yeah. 353. So I said 360, but I was actually going off of this area that I had circled. So it's actually 353. So 353, 355 is right. So 350, 355's got really good OI. Still, man, $2,000. I mean, you gotta think though. If you put $2,200 into that position and it pumps 25%, you're looking at $550. So I think it's going to breach 385 before it comes down.
Yeah, with I have a feeling like these ERs with these big companies are going to pump SPY up, and then that'll be when probably, like you said.
I think it's going to touch 400. To be honest, it's going to have a nice rally. You're going to have a big green day.
Yeah.
ER. And then that's when we get out, or that's when we get in. Maybe. If you're in something, get out. If you're out, and if you're going to get in the SPY, get in it for puts. And I don't normally, like I said, leaps by all means. Anything shorter than 6 months, you're not going to hear me say yes or no. I'll probably say no. All right, anybody else?
Yeah, I was looking at Range Resource Corporation, RRC.
Okay, what about it?
I was thinking about buying in some puts because they jumped from 11, well, down to 8 in a week's time. It's been playing around with the 8. I was kind of thinking maybe I could probably put it in for put maybe around 850 and go down.
I wouldn't do any puts on that. I mean, it's oversold. MACD is pretty wide. It's bouncing off resistance levels and acting as support. I'd say you could do puts if it hits $9 and change. It's definitely, well, I don't know, man. I wouldn't do anything on that.
Okay.
Yeah, I probably wouldn't touch that. It's right in the middle of its range.
Right.
I mean, there is this. Could be still bullish, honestly. Balance out the 50% retracement almost perfectly. So if anything, I'd be into calls. But I don't know.
It's just kind of down right now.
I mean, I'm more inclined to say calls than puts here because bounced off 50% retracement, really wide on the MACD. It's oversold on the true momentum. Trend has changed to green. There's 4 things that tell me that it's going to bounce or has bounced and will probably continue to bounce somewhere above this first standard deviation channel. So again, over $9. But I mean, the values of the stock, as far as the contracts are, I don't see any real value here. You buy 69 that goes to 950, you're looking at maybe a $20, $30 gain potentially. For me, I need to see 69 go to like 150. I need 100% return on something so small, right?
Right.
I don't like stuff so small like that, and that's another reason why I like leaps. A $2,000 leap with 25% returns, $500, and that can happen pretty quickly if you buy at the money and it moves up 5%. Whereas this needs to go up, your contract needs to move. I mean, the stock price needs to move rather 10, 15% to see something like that. Or percentage wise, needs to see 25%, you're going to need to see the stock move 10%. IV is pretty high, 84. Although IV rank seems off to 6%, that's pretty low. That's really low, but 84 seems high. So I don't know. This some unknowns here that make me not feeling it.
Yeah. Thank you.
You're welcome. All right, I'll take a few more questions before I end this.
Hey, Hostile, what's your take on the COVID mutations? You think they're going to try to add fuel to the fire for the market drop with that?
Could be.
Yeah.
Could be. Could very well be. I mean, it's almost perfect timing, to be honest with you. They're going to let the earnings come out, a nice pump. Everybody that's smart is going to get out, take their profits, and then everything else is going to crash. And they're going to they're going to pile all kinds of stuff in at one time to make it all come down hard. And I'm probably going to start exiting some of my positions here pretty soon. Trying to log into my account here, but it's not doing anything. But the further we get with the market pumping, the more nervous I become holding the position.
I mean, we're getting like random stock pumps left and right from just small like penny stocks.
Hard to say. I mean, I don't know. I think in the next 2 or 3 weeks we're going to see something though. It's not going to happen this week, but I feel like it's coming for sure. All right, anybody else? All right. Well, I guess I'm going to end it. This has been a long night, 2 a.m. Hope to see you guys come back Thursday and even to Cal's stuff on Monday and Wednesday.
Thank you.
You're welcome. Have a good night.